All right, hey guys. That's correct, Dave. Hmm. Sorry, I'm just trying to get things set up. Sorry I'm late. It's a little stuck on my way home. Who the fuck is that? There it is. Stupid fucking epic pen. All right. How's everyone doing tonight?
I just want you to know I was here on time,
I believe you.
and you were not.
No, Wilson, I apologize profusely. I hope
I
someday
apologize.
you can accept that.
I literally just did.
Oh, okay. And maybe find it in your heart to forgive me.
Whoa, 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 whoa.
I mean, even if you're not ready now, I'm not, no pressure.
Yeah, give me a day. Did you see the new Fed Z tables dropped today?
No, I didn't.
You want to see something fun?
Yeah, put it in chat. Let me see. Oh shit,
Yeah.
that's a bubble.
Yeah. That little peener right there at the end that just goes straight up. That's a fun one.
You like how real estate dumps and or equities dump and real estate bubbles.
Yeah, well, that was, the 2000. Yeah. Everybody went into, like, after the 2000 pop, everybody just ran into real estate, and then that bubble popped. Now we're in we were in the Goldilocks zone for a while, but now stocks have gotten way out of control again.
Yeah, the Goldilocks zones don't generally last very long. I mean, equities as part of like I would assume this is all part of like the average household exposure to assets.
Yeah, this is the portfolio components by percentage. So
Yeah.
32% of the average household portfolio is stocks.
So what you're actually seeing in the dot-com bubble there, for anybody looking at it, is the reflexive relationship between equities and real estate holdings. So when equities tank, it's not that values of real estate go up, it's just they're simply a larger percentage of the individual household portfolio.
Yeah, there's some of that going on too here. Yeah, if
Yeah.
one drops and the other doesn't, then the other one will go up as a relative percent of the portfolio. Sure.
You know what's fucking really depressing?
What's that?
Look at pensions.
Yeah, so I looked at it. Even if you include pensions, we're still in the biggest bubble. Because you think that, like, okay, well, most of the stocks are owned by rich boomers who are retired or about to retire, but mostly retired. And you see a big drop in pensions after COVID. But even if you normalize for that, it's still bigger.
What a mess.
Yeah, it's pretty wild.
Imagine if workers,
Got paid.
well, no, just demanded their fair share.
That's disgusting.
I know.
Anti-American. The percent of people who feel that the American dream is still alive has dropped from 75% to 25%, and God damn it, we're Americans. We can get that to 0.
We could, yeah. You also have to remember that 50% of the people are really just so stupid that you could just tell them that it's alive and they'd believe you.
No, it's only 25% now. Literally half of the stupid people will no longer fall for that trick.
That's kind of what I was trying to point out.
Yeah.
We can't even trick the stupid people. Imagine, I'm just saying, I mean, what if workers got together in like a group,
No.
you know, and they were like,
Yeah.
hey, you know what we'd like? We'd like to make more money because we make $20,000 a year, 50 or whatever the fuck poor people make.
No, that's a society. I mean, socialism, and that's bad.
And then they like bargained for a higher wage, but
No,
collectively.
no.
No?
What they need are lower rates.
That makes sense. For all the money that they need to owe later on.
Yeah.
Because they don't get paid enough. Wait, are we using the Fed to ensure that poor people can indebt themselves to the hilt, and so thereby ensuring their productivity? Like, we wouldn't lower rates so that people could borrow more to buy overvalued assets so they had to work every single day of their life until they drop dead. Like, nobody would ever, no society or government that had the interests of its people in mind would do that, right? Wait, right?
Sir, this is America,
Jay Fresh?
where this is America. We don't do that.
Wait, which is the part we're not doing?
Exactly.
Okay. It's almost like keeping rates higher forces people to save money so that they can borrow money later, but with less overhead.
I don't know. I just want JPOW to preserve the value of my overvalued home.
I know you do.
As someone in the top 10% of Texas, at least, I fully support what JPOW's doing. But as somebody who has some amount of empathy, fuck the Fed.
I mean, is the Fed?
I'm not going to try to stop him, but
I feel like the Fed's not actually
else wants
doing anything.
I'll understand. Yeah, the Fed's not really doing anything. Everybody has already assumed they're going to cut, which is actually just going to make it worse. I actually have a theory. The Fed can only either do nothing or stimulate.
Yeah.
With rates. Rates can only either be... They can only stimulate by manipulating them. Because if they manipulate them down... Right? Because if they don't manipulate them, that's like the market equilibrium. And so if you manipulate it in either direction, you create opportunities for people to arbitrage the difference between what the Fed is allowing and what the market needs or wants. So it doesn't matter which way they move it away from quote unquote neutral, which would be what the rate would be if the market was left to its own devices. It will create opportunities on either side. If you lower it, it will allow people will take advantage of various schemes to do leverage below market rate. And if you raise it, people will just earn interest above market rate. Nietzsche, that's not what this is.
What? How do we do that? I mean, you can raise rates at the Fed enough if you make them oppressive that you can destroy liquidity in credit markets, thereby reducing systemic leverage, which is what they're supposed to do by raising rates.
But the only way to make it oppressive is to break something.
Yeah.
And they're not willing to let things break. So
yeah, they're wieners.
On the table.
Yeah, JPOW could raise rates to 6.5% next week, and all the G-SIBs would go under, and things would get real cheap for a while.
Yeah.
Real cheap. Back to $50,000 houses in no time.
All right, Nietzsche has a question. Get up here. What's your question?
Dylan read Gammastrike wrong this morning in the first 30 minutes.
Why? Because you lost money?
Yeah, I did. Yeah, well, yeah, totally.
Well,
so I'm just wondering, like,
how did you lose money?
he probably bought puts.
You think one thing or does another, and then and you were, I was wrong. I read the data wrong. I misinterpreted it. So
okay.
This is we're going from Jay Frish's autoerotic pontification to my self-flagellation here.
Okay, but hold on. If we're flagellating you, how did you not make money today when I was giving everybody free money? I was feeling very generous today.
Now you're flagellating yourself.
Yeah.
All right, continue.
Yeah. So the that massive just pile of gamma that it wrote up, I thought that was looked more resistive than just a air snapper that turned out to be. I'm just what was, and you even said that there, that there was. I'm going to misquote you, but slightly, but that it would take a lot of work to get to 80, and then it would take a lot of work to get to 90, and then 95. You kind of repeated the same thing, and I'm not saying that they didn't put in a lot of work because they achieved those things, and it was very grindy.
Yeah, that does shift throughout the day. That shifts based, like, kind of how far they can push the market at any given moment is very valid in that moment, but it does change.
Oh yeah, no, it's dynamic. No, I'm not saying you were wrong.
No, I know.
You were right. You were right at the time, and then things changed, but slightly. And I wasn't. wasn't operating off of your assessment, at those intervals.
Mhm.
I saw the data and I was like, okay, this, honestly, I thought it looked a bit like yesterday as far as like the initial setup. So it was kind of go do a little crusty thing, and then kind of do the opposite of what it did today, basically, and just more or less, trend downward.
Yeah.
Wait. Hold on. Was this before or after I sent you the message that said, I kind of want to sell calls on SPX, but I know I should wait until OPEX or later, and then sent you the
Oh,
chart?
I made this mistake
Charm.
before you sent me that DM, and
Okay.
so at which point, it's like, well, yes, obviously, in hindsight now. No, it's not your fault. No, again, this is my own fault for misinterpreting the data.
It is a weird time. I mean, so let's put this in context, right? I mean, we would all love the idea that we could always just find some pattern that exists and then exploit it and expect it to do exactly what it has done in the past. But as we know, holes close, people find weaknesses and close those gaps over time. And
Sure.
strategies change to try to exploit those things. And so right now, I think the idea that we're coming up against a huge quarterly OPEX, it's literally one of the biggest ever. It's bigger than the December OPEX, which is crazy.
Bigger than this coming December or
No, last
past December?
December,
Okay.
which means it blows the. I mean, we can go to the macro page. What was Delta last September? It was something like 4.7 trillion.
Mm-hmm.
And then before the pump today, it was sitting around like 5.3 trillion. And now it's actually surged because of the jump today. It's sitting over 6 trillion delta. And
What? Jesus. Okay, that's a number.
which that 6 trillion is actually larger than the 5.8 trillion that was December OPEX, which usually is bigger because that's like a huge index. It's a huge leap expiration.
Right.
Um, so you just have this massive amount of contracts that are all expiring very soon. And so all of the second order Greeks are very important, which is why I sent you that chart of charm. It's something like on the SPX, which typically is short calls and long puts. If you add that up, it's like something like $20 billion of buying a day. And if you think like the average day, like total traded on the market is something like 40 to $50 billion, you're fighting against an absolutely insane amount of just mechanical buying. Um, so my expectation is probably I wouldn't. I personally don't feel comfortable going short on the SPX until near or after OPEX. If I was going to make a short play on the SPX, I would do it right around OPEX. Because my bet would be that the money that gets freed up and gets settled and comes off the table won't get put back into the market because people are already skittish and they've already got their money and they want to protect it. So that's kind of where I'm thinking I might dabble in that. But right now, like intraday, yes, like there is always a chance because of the dynamic of everybody goes long vol on SPX AM contracts. And then they hedge that by going short vol on the 0 DTE intraday. So there is some risk overnight, but they can recoup a lot of their costs to hold their carry, right? And then, if some vol event happens overnight, they don't care. And if some vol event happens during the day, they can close and try to minimize their losses. They can actively trade that.
Well, that's only true if the carry on vol is positive still. Otherwise, the margin requirements would push them to cover.
Yeah, that's fine, but they can cover quickly, right? I mean, they can take
Yeah,
losses.
yeah.
But right now, the charm on the SPX is so much larger than any charm that you might see on the SPXW. So kind of what I expect between now and OPEX next Friday is generally trending up. You might see days where the market first goes up and then goes down because there is some negative charm generally based on the positioning on the SPXW. So you could see like in really low volume environments, right? I mean, it goes up and then it can come down intraday. But I don't really, yeah, I don't.
That was basically yesterday. Yeah. The
Yeah, and
PPI,
that'll
PPI
happen.
was quote unquote, a little cooler. In that revision was favorable.
You mean
So
fudged?
yeah,
I didn't say that.
sure.
Yeah, I mean,
You're already
just think
on.
what
You're already
happens
on the
like
same list that I'm on. So
I'm on all the lists after today's stream card.
you think
I
about like
said
so
the
like
quiet part
even if
loud.
somebody tries to sell off, not only are you fighting against the positive charm buying, but you're also having to deal with the gamma, the positive gamma. So as you sell off, the market maker's buying into that, and then when you stop selling, then like all of that charm just like floods in, and the multiplied with the buying, that's like where all the V's come from, and that's why the upward pressure seems so strong right now.
So I mean the V that we had today happened in what, the first 45 minutes?
Yeah,
The
but a lot of people sold right in the pre-market, right? Individual stocks.
Look, I'm still not getting to where I thought today started out looking like yesterday, and it did the opposite.
Let's
Today's positioning was totally different, though. I mean, yeah, you gotta be more specific than I thought it looked like yesterday. But if you can be more specific, I can probably tell you the thing that you misinterpreted.
Nice if there's a rollback on the live data.
I mean,
It's funny you should mention that.
Ooh.
yeah, it is because we don't have one. I mean, I can look at live data from this morning. It's still
Yeah,
up.
no, I have today's live up.
Okay.
I'm just also looking at on TradingView the 0 DTE. No, I just again I remember seeing all of the gamma above spot at open, thinking, oh, this just a wall of sold calls that I did not expect them to just plow on through. I think someone made a comment about the SPX's cervix is bruised.
That was me.
Yeah, I know it was you.
The charm on the SPX AIM contracts right now that are expiring next Friday is larger than whatever positions will get added on the 0 DTEs right now.
Vana and charm flows are very supportive.
Yeah, I haven't even really analyzed the Vana just because the charm's big enough all on its own right now.
It is, yeah. Well, as long as IV continues to decline, the Vana flows are strong.
Yeah, I mean, unless IV explodes, then it's the charm's enough. So Vana's probably not going to hurt at this point.
Live data is archived on YouTube. I mean, actually, not today though, because today I was jerking off over my new awesome indicator that I made.
Oh, jeez.
Also, that requires like going back and work and stuff. I'd rather just.
Yeah, while you're there, you could like and comment on the stream.
You want me to like the stream? Because I can like the stream.
No. Not the way you like the stream
Mm-hmm.
with 800 people.
Mm-hmm.
Yeah,
Yeah.
mm-mm. Just one like per person.
You, you you get your one like and you like it. Quit complaining.
Get it?
Okay. So
Oh, you guys can't have my new indicator. What? Who's this Carl? This is a different Carl. Is this Stream Carl? Oh no, it's just Danimal pretending to be Carl. Never mind.
Weak.
so for
Get your own
so for
identity.
so for tomorrow, gentlemen, what's the what's the lesson learned other than like don't be initially overly bearish, be
Yeah, I
more
mean,
patient.
I thought we were just going up all day. Although I did wake up at like 9:30, and then I didn't get on the stream until 10. At which point, the little dip that you shorted was already long gone.
Yes.
But
It went bye-bye.
I thought I was I feel like last night I was I not on top of the bullish outcome? Things are super bullish and a cooler print. Looks like bulls could push all the way out to 75.80. Yeah, so that's about where they had positioning this morning. And we opened
Okay.
above 50, right? So what did you short there? That's my question. Like
Oh,
I see
I
the
sold
GF, like the GF rising and the rejection, right? So like we reject
yeah,
off 55 or 557,
45. 45 test. Yeah.
and
No,
then
and then
we dumped a
yeah,
little, but not. Yeah, we only dumped 245. Like we didn't get
no, I
below
had
the delta flip.
I had 50, 55 call spreads. Fair call
Oh,
spreads.
okay. So you sold call spreads at open. Okay, so here's the big difference between yesterday and today that I think this is where you fucked up.
Okay.
So yesterday when the market opened on open, we were significantly
Are you writing stuff? I'm
yeah,
supposed to be
I
paying
am,
attention.
yeah, of course. Above well, so other people can see it or deaf people, I don't know. We were significantly above the implied move for the day. There was like a big overnight move. Today we weren't. Like if you go back
Okay.
and look
No.
at the implied move from yesterday, it was like 65.75 and we opened at 65.50. So, and that's, that's kind of where with the overnight data, and remember to always check that in the morning, everyone. But with the overnight data, VN was at 65.76. And so, um, the difference there being that calls opened at close on Wednesday's open were deep in the money. They were deep in the money, and they were already, they were so far in the money that they were, massively overpriced to what they were the prior night. And so what we got, which we didn't get today until we hit kind of the peak of price action, what we got everybody at open wanting to sell that overnight move. And you see this frequently with large overnight gap ups on SPX, where we opened really high, like above the implied move, above the gamma, like all the out of the money gamma, and usually we'll open at the price where delta starts to drop off. And so if you actually go back to Pickles picks from Wednesday night, and you look at where the delta drops off on the delta chart, delta into end of week, you can see that the delta falls off. Is that Wednesday? What fucking day is that? Hold on. 9/8? No. I need 9/9. 9/10. Did I skip a night?
No, you just do. Sometimes you do things in the morning.
Yeah.
Well, the morning for me, because I'm three hours behind
Yeah.
you.
So maybe it was 9. Oh, 9. Yeah, 9/10. I didn't post it. Son of a bitch. Actually, I can just go back here. If you look at delta on delta into the 12th, but a day ago, you look at the net. Is that right? 9/9, 9/10. Yeah, okay. And then this was no, that's tonight. That's last night. That's the night before. Yeah. So if you look here, 65.50 above that, there's almost no fucking delta. See, like the delta just.
Yeah.
I mean, not only does it kind of dump at 45, but it dumps really hard after 60. And then if you look where we opened on
Basically,
everyone's
pretty much that little divot, didn't we?
Yeah, if you look where we opened yesterday, we opened like right above 50, like right at 50.
Oh.
Sold off, pushed up into that like little bit of that little knob of delta out at 55, and then we sold off all fucking day after that. And that's because everyone's just taking profits. We're just smashed up into the top of the chain. Everybody's made money, right? Everybody who was positioned the night before, they killed it. And so they're all pulling back their calls. Meanwhile, those calls are super overpriced relative to what the market makers previously priced in. So anybody who didn't have a call, they're just selling the fuck out of the call that's now massively overpriced. And then, the market maker starts dumping delta because everyone's pulling back their long calls, volatility is going up, everybody's selling the out of the money calls, which is, causing the MM to shed delta and then price starts to decline. And then all day yesterday, or the day, yeah, I guess yesterday, all day yesterday, every time we did get an upside test, we got a repeat of that same thing. Like everybody would cut their calls and then they would sell more calls into the market. So after those couple of tests at GF, that kept failing, we were like, I think it was like the 65.45 level. We just couldn't get above it because they were selling the 50 and the 55 so hard. We just eventually just dumped into close, and we squeezed back up a little after filling the gap, but really not that much actually. Like it was still surprisingly like a kind of a small end of day move back up. As far as mean reversion goes, like you would have expected bulls to try to push for like the mid 40s or like push for 65.50. And they didn't even get that far. So they just got shit on all day. Today was the opposite of that. Today the MM had a lot of range priced in. We opened within that range, and people piled in and pushed that range higher.
Okay. Nice. Yeah. Nice. I see the mistake in my thinking.
Yeah.
Yeah.
So it was like a bullish open.
Range.
You're like, this is. I get where you were coming from. Like, this is gonna sell off. Everyone's gonna want to sell the calls, but really at open today, calls weren't much more than they were at close yesterday. Like if you were straddled last night, they were kind of shit until we hit like VN.
Yeah, I noticed that.
Yeah, and you can think about it in terms of like the just the dynamics of how people are trading, right? If you open above the expected range, like nobody wants it to go higher. No one. And so selling all the calls above that expected, well above that expected range is going to put downward pressure. That's going to be hard to overcome. But if you open inside the expected range, the market maker doesn't care, right? And then everybody starts selling above the expected range. But then once you creep up above the expected range, all that starts getting blown out. And that's why
Yeah.
I was actually after I sent you that today, I was thinking like, there is a chance that this could do what it did yesterday and go back the other way. But I was like, you know what? I don't like that. I don't like that it bounced above the expected range because that's about when I was kind of thinking about it. I was like, I think that calls are going to be like sold calls are going to be on the back foot all day. So I just walked away.
So cool we have this now. Yeah, and I think Delta Flip was a really good indication of that. Like the fact that we bounced off of it. Especially that we bounced off of it so hard. So like if you shorted, here
On
near the top of that,
our Delta Flip, mm,
it's about the
it
same.
no didn't bounce. It came within
Yeah, kind of close.
$2-3 of it.
This one's a little bit better now. We're working on refining them, but
You're gonna make them all jealous.
yeah, I know. Well, we're just constantly improving the product. That's our job.
Continuous improvement.
Yeah, only better, only up.
Yeah,
Like
but
stocks.
It's not ready yet, so now people are just gonna be
Sad.
yeah.
Nice donkey dick.
I put this in the stream chat, Jay. You probably didn't see it, but like, I work in cybersecurity. Like, I have no, I am dead inside. I am always sad. So, no, don't worry about me. It's status quo.
What? We don't want you to be sad. We care about you.
Well, that's really sweet of you. But
nah, he's already got daddy issues and shit. It's too far gone. We can't save him. But the next generation.
I'm well beyond.
We can still maybe save Dork.
Maybe.
There's hope. There's a small window.
Hope is an awful word, Jay Fresh. Wash your mouth out with soap.
Anyway,
I think that helped. No, it was. Where did we open in relation to the expected move?
Yeah, very different behavior from market participants based on that.
Yeah, no, no, it's a habit. I put the expected move on my charts first thing in the morning.
And why? Ooh, here's another good one. Why were we able to push up so high above the expected move? Because all of the positioning that pushed us up there came in after those options were already overpriced. So those people were already buying those calls at higher prices. And so a lot of people in the early part of today, actually, some of you guys bought calls real early in the day. That shit did not print until the very end of the day. Like all those like 85 and 80, 90 call holders, you guys didn't make dick until like the last 5 minutes. And that's why I said like at the end of the day, like if we get up to 92, it's going to tank because everybody was long those fucking calls all day long waiting for them to print.
It tanked on the last candle, sir.
It fucking dropped off of the first test at 92 hard. Also, I want to point out that an hour, like at least 2 hours before close, I said we weren't going higher than like 93. And I was
you said 92, 93.
Spot
I
on.
witnessed that. No. I was also admittedly angry at myself and was like, I'm not going to put any more risk on today. And it was emotionally compromised. So
I see.
Yeah, no.
Were you mourning Charlie Kirk?
Oh God,
No.
I cannot go there today. I can't.
Now you need to watch your mouth. That was soap, sir. For shame. Little dork hold you down and do it. That'd be funny. Little dork and little J Fresh holding you down, washing your mouth out with soap.
They'd be into that. They'd also probably hit me with a hammer while they had me under control. I'll reiterate the
All
thing
I'm
I
gonna
said
say-
earlier. If I die unexpectedly, it was Jfresh. And
Jfresh does have a lot of
and
gamers.
he's doxed himself to everybody, so you know who he is.
All I'm gonna
You
say
don't know
is
who
there were
Jfresh
two
is.
school shootings yesterday, and they were both very sad.
They were very sad. Oh, no, thanks. I appreciate the lesson.
Yeah, anytime. That's what I'm here for.
Is it? No,
I don't know. Probably just to inflate my own ego, but you guys get the side effects of that. So
1 sec, I'll be right back.
Oh, anyone else?
yeah,
Have
this guy
questions?
Van Gogh just popped up here.
Yo,
Yo,
first time the microphone worked on the first try.
nice.
I just tuned in here, missed most of the beginning here. First
Later,
thing,
Otter.
when new toy, and
Which new toy? You got a couple, I think. Well, are you in the beta?
yeah,
Yeah, you got
No,
you just got a new toy.
the squiggly line from the stream today.
This shit?
Yeah, that guy.
You guys can't have this. This is like a fucking 90% accurate trading strategy. You can watch it sometimes, but that's mine. That's mine.
So since we can't have that,
Yeah.
how do we use GS to refine our entries,
That's a good question.
or just fuck them up moderately less?
Fucking well, that's always a good choice. Well, remember that anytime you want to buy a call or buy a put, it's almost, at least statistically, more likely that selling a call or selling a put would be better in terms of your chance at profitability. The other thing you can do, obviously these are just basics and outside of GS, but like
Sure.
you can buy those options in the money versus out of the money. So they have more instantaneous exposure to price movement. The deeper in the money you buy them, the more sensitive they are to spot price, due to their delta, their increased delta. But as far as using Gammastrike, there's a few things I like to look for. I mean, obviously, like delta flip and gamma flip are big ones. Like those are very simple. Like real just big obvious signals that like, hey, you can do something here, right? I mean, the thing you pick might not be the right thing, but it's a good time to do something. Because generally speaking, the market doesn't like to sit at those levels for long because participants want to push things one way or pull them the other. And so like that perfectly neutral zone, even though it's heavily incentivized by the market maker to hedge back towards that, the market itself wants to push away from that. And so those tend to be, very, very good entry levels. Obviously, like this morning we were just talking with Nitu about this. Like this was a good one. Here or here even where it kind of bounced a little higher than it, but part of this has to do with the opening, right? So delta flip and gamma flip haven't really caught up with where the price level is at because of the overnight gap. But the other thing I would say to look at is go look at your live Greeks by strike charts. There's none here currently, but I can pull some up here. And you want to look at levels where there is going to be larger piles of gamma, because those are going to be the levels where either reversals or continuations are likely. So, if the price is dropping and you have a large pile of gamma to the downside, you don't need to know if it's bought or sold. You don't even know if it's puts or calls. It doesn't fucking matter. A lot of gamma, a lot of negative gamma. Price is very likely to get stuck in that because it's not positive gamma, it's negative. And so you can assume that like on the shift from positive to negative gamma, that price action will kind of just keep slipping towards that as it's dragged down. So that's one way to define an entry. Now, once price gets there, it tends to stagnate for a really long time. But if support is found at that larger strike, like down here at 75, then price is likely to reverse back up because, they're going to build support out here and they're going to push spot back towards positive gamma where they can continue, selling puts on the upside move. And then that will drive the strikes further up, more negative, but it'll, continue to push spot price up into more and more positive gamma where the MM, is buying on the upside or buying against the downside move. And so, kind of pushing up on any failures or profit taking to the upside. And so, and then in positive gamma, you go up and like this, what's this? 6,600. Like you go up and test that strike. That's weird. And you're going to get a lot of resistance, right? And so that can be a really good opportunity to take a position as well because it's significantly larger than the gamma, the surrounding strikes, right? Quite a bit. Sorry, I'm looking at speed, but and then the gamma above it's really low, so not a lot of continued effect if that strike were breached, and so that can be a good opportunity to buy a put. Although generally on upside moves, buying a put, unless the move is really extreme to the upside, buying puts is usually kind of bad. But it does present a good opportunity to sell a call because you have all this protective gamma in between you and the call you sold. And so thinking about how gamma and delta at different strikes is going to affect spot price can give you an idea of where it's not best to enter or exit, but it can give you an idea of where you can reduce risk on your entry or exit. If that makes sense. Yeah. Okay.
Applying it will be trial by fire, I'm sure.
I mean, you could probably do something really simple to start off with until you get a better feel for it, but just be like, I'm not going to buy a put or buy a call or sell a put or sell a call unless I am at the largest local pile of gamma or delta or whichever one you want to pick to try to trade, and then obviously you want to keep a predefined list of risk controls. So you want to be like, I'm going to set my stop here, I'm going to buy here, I'm going to take profit here.
Yeah, I'm doing that. I'm just struggling with so I'll pick the right direction, as it were, and just the entry will be, I'll end up getting stopped out, and then it'll run, can run back in the same direction I was.
So you're tightening your risk too much. So,
but it seems like that's, if you get the right entry, there's going to be a buffer, and your risk, you'll be farther enough away from your risk that you'll small pullbacks.
Not necessarily. So you've got the right idea, generally speaking, in a very like lackadaisical market where not a lot's going on. Sure, yeah. I will say that most of the time, you got a little bit of a buffer. If you pick the right direction, you're going to be good. But there are instances where you have to be really, really careful about the spread in the contract. Now, remember, contracts relative to like an equity or something are extraordinarily illiquid. Unless it's like a major strike like 6,500 or 6,600 or 6,550, something like that. You're gonna deal with a lot of illiquidity, and there are moments, and this is just something you learn from trading for years, but there are moments where you need to be really, really fucking careful about how wide that spread is going to get. So say we're kind of like falling off on like a downtrend like that, right? And there's, major support here. And then we hit that and we kind of bleed a little bit more, and then we do that thing where we like tank. Right? Just big fat fucking red candle. If you buy a call here, the price of that call is going to go up and down like crazy for like a few minutes. Because basically every fucking person in the market is trying to buy these calls as they slip out of the money. And it's driving their bid ask apart really fast. And then when it snaps back and they close that arbitrage, it overshoots, right? And so, that contract might hit like $1.25, and you're like, this is my buy. And you buy it there, and you set your stop at like $1, and the contract like spikes to $2 before you can even sell it, and then snaps back, and it'll like snap back to like 90 cents and just fucking blow you up. Because the MM can see your order on the book. They know the price of your option. And so they could just drive the price of the contract via the bid ask into those piles where they have large volumes, and they know what prices those are at, and they'll just fucking blow you up. So when you buy this contract at the bottom of this, you really have to just not set a stop. And this
just that.
Yeah, this massively increases the risk, obviously, say if you buy 10 of these or 12 of these. But yeah, you basically, buying that contract in that situation when vol is spiked and it's about to collapse and reverse the other way, like, you just can't. If you set a stop on it, you'll get stopped out like 100% of the time.
Yeah.
Now, that's very different from if you bought a put here.
How so?
Well, because here volatility is very stable, the spreads are stable. There's like not a lot going on, like you might be one of a few buyers interested in that contract. There's a few buyers interested in other shit. Like, not everybody in the market is targeting the thing that you want to purchase, like, because it's not very obvious, like price is downtrending, but downtrends break up, right? So you buy the put there and it's going to be priced pretty stably.
Right.
And then, as that put bleeds, it slowly increases in profitability. And then here, that put's value will go crazy, but your stop's, all the way the fuck back here. So you're not worried about getting stopped there, and you're already profitable. So you're just trying to pin the maximum profit by closing it somewhere, down here. Okay. And so this is theoretically a far less risky entry than buying the call here. Because sometimes, that call that you buy on the bottom, like, it snaps back and forth, and then you get that candle up, and then everybody else who bought that call and survived the snapbacks, they close it.
Yep.
And then this goes right the fuck back down again.
It also seems like the value of that contract doesn't go up proportionate to how fast the put would have gone up on the way down.
No,
the repricing of the call side.
Yeah, that's correct.
Yeah, it definitely feels like you get it. Your all the stops just get hunted instant by, like, so unless you just don't set a stop until there's movement in your favor, and then once obviously you're setting a take profit. It seems like, yeah.
Yeah. So there are instances in trading where you really just have to you have to trust your instincts. Now, there are some ways to reduce that risk, right? Like, if you're at the bottom of like a big drop like that and you expect the next candle's gonna, move up, and you're trying to play this risk reversal, you can like open like a bull call spread.
Okay.
And this, like, by opening that, like, say you open the out of the money call, or what? You go long the at the money call and sell the out of the money call.
Yeah.
This will reduce the volatility in the price of your contract, and like even if this like bounces up and then snaps back down and then kind of grinds up slowly, like the volatility of your spread between your two contracts is going to stay pretty tight. You're going to be less exposed to that kind of price movement. And these are really great because a lot of the times, especially in a positive gamma environment, you can open that bull call spread there at the bottom, maybe for like a few bucks, like $3 for like a 10 wide.
Okay.
And you can open it, at the money and then just here, and the reversal point's all the way up here. So it's very likely that if a reversal does happen, price is going to go back up here, and then people are going to take profit and do shit up here. But you're going to be just chilling in the money. You're fine.
Right.
At that point. So they can be really advantageous in those high volatility situations. And you do get a little bit of downside protection on them as well, where, that volatility might, price might fall, vol spikes, but then you're selling some of that vol, which
Right.
gives you, this much padding relative to your like percent profit from vol. So it's like buying a call, except it's got like a little bit of a downside hedge baked into it. I will say that the one caveat here is that these are hard to move when the market's volatile. So you've really got to pick your price well and have it set up so that when the market price of that spread hits, your order is already open. So you got to kind of anticipate the price you want to buy into that spread at. But if you can anticipate the price, then even if price collapses again off of the bounce, you've got a little bit more of a buffer than all the call buyers that got fucked on the bear trap.
Right. All right. Unbelievable. Every time I listen, it's like.
Thanks, man. I got it working on YouTube. Thank you for letting me know.
Yeah, it
Oh, yeah,
really
you're on.
resonates with me when you said you got to trust your instincts a little bit. What I found when I trade zero DTEs, that the time, almost without fail, I'm pretty well calibrated to the time where I feel like I need to set a stop to prevent losses. I need to just sell it. Like if I'm like I need to set a stop, I should just sell because
You're
it always
right.
goes like returns always go down from that point. And it's like, why did I even bother getting the stop set up? I should have just clicked sell. Every
You
single
can't lose
fucking
money
time.
taking profits.
Yeah, I'll say I actually have like a rule that I'll give you guys with zero DTEs. If the stock cycles, like the price of the price of the option cycles twice, I'm out. And what that means is basically like wherever I bought in, right? If it drops and then bounces back, that's one time. And if it drops again and just breaks up to even, close it.
Yeah, because
Yep.
you're pretty much wrong by then. And
Yeah.
so
Not only are
fast
you
down.
wrong, you're gonna just start decaying out immediately.
Yep. Yeah, that's a good rule.
Yeah. Because everyone's been in that situation, and you guys see it all the time, but like the price of the contract will, and there's actually a mechanical reason, but I'm not going to go into that. It has to do with, the option pricing up and then falling back is encouraging sellers to come in, and then the spread widens out to the downside, and then it's more likely that price drops. But the important part of that is that, like, you know, you've all been there where you buy into a contract, you think you got a great entry, it goes up like 2%, and you're like, ah, fuck, like, you don't even have like a fucking, like a bar to set a stop at that's profitable. And then, you know, it drops down like negative 1.25%, you know, and then it goes back up and it's up like, you know, 3%. And then it drops down and it's down like 5%. And then, you know, then it goes back up and you're just at break even. You've already overheld this shit because, you know, over time this is just actually trending down. You're not thinking about it because it's happening so fast, but and then on top of all of that shit, even if the price of the index is the same, the options value is decaying, and that's something you have to be constantly aware of with options on zero DTEs. Is that option is decaying faster and faster and faster as the day goes on. So when you buy an option in the morning, it's got a little bit of staying power. You can hold it a little while to like let your thesis play out. But by like noon, everything from noon on is just fucking downhill. So if you get an option and it doesn't print, get the fuck out of it. It's a bad option. And I know you guys only have so many day trades and you don't want to burn up your settled cash, but I'd rather burn up $5 of settled cash or burn up a day trade than lose $1,000 on a contract that shits the bed.
Yeah, I would say at least for zero DTEs, something that helped me just because I don't put real, you know, huge amounts of money into it, just enough to let Fidelity let me fuck around. Yeah, so like, you know, I don't have the 20 or 25 grand in the account, so I don't want to get pattern day traders. So I just said, you know, I get 3 zero DT tries a week. And if they don't pan out, that's tough shit. I don't get more.
Yeah, no, that's a good rule. It's there's a part of that sucks. I mean, it's intentionally designed to keep account balances low because it creates like kind of like a panic response, and it's a hard discipline to lock yourself into like, I'm gonna make a trade on Monday, a trade on Wednesday, and a trade on Friday.
Yeah, but the reality is that those opportunities for you to take money from somebody else who's trying to do the same thing, those are quick, and it really comes down to like execution. How well can you execute an enter and exit, and are you gonna make the decision to get out before they do? That's kind of like what I was saying. Like usually when I'm thinking I should just close it when I'm setting a stop. That's why I think, you know, because it's like you give the market time to adjust and try to rearrange and take advantage of you.
Here's a great one. Here's Willie's from today.
What are we looking at here?
This is like a SPY contract. See these cycles though?
Mm-hmm.
Like if you're holding through all of that, and he held through all of that, like generally speaking, you're just getting fucking borked. This one kind of
worse. He was in bad shape for most of the time there.
Yeah, most of the day. Like it's this is a few hours. Yeah, this is a rough hold. But good example of what I'm talking about by this, yeah, literally the pain trade.
Yeah, I don't have anything else that's useful.
All right. Well, thanks for coming out, man. I hope I gave you some information that was helpful.
You did, and now 2 out of 3 of you know that I do exist.
True. That's true. Yeah, Dork still hasn't found out, but he will.
Next time he's there, I'll just make noise for this for the hell of it.
Okay. So yeah, just make a white static noise when you turn your mic on.
Make white? Yes, got it.
Yes, you got it. Perfect. Catch you later, man. Thank you.
And I so I see someone's raising. I see Nimrod's raising your hand, but real quick, Potato said, how do you tell when calls are sold or bought? And same for puts. I hear you say that on stream. It's largely an educated guess. We have some tools we don't share, mostly because they're kind of wrong. But the gist of it is, if you look at the IV and you look at the price of the contracts, and you could kind of see, like, on volume what is happening to the price of that contract, you can get a sense of, at that moment in time, whether things are being largely bought or sold. So you can, if you ever, just out of curiosity, you can go, whatever broker you have that shows you contract volume and price over time. Just pull up a contract and just see what happens to that contract while the price is moving, and you'll see, like, oh, if you have like a call that's near the money, you'll see that, like, oh, it's like when it's spiking, when the price is spiking, like, all of a sudden all this volume comes in on these calls, and the price of the calls just start rocketing.
Ooh, I've got a fun one. Another one. Also, when you guys get Gammastrike V2, like the V2 live data, you can actually use the put call ratio as an indicator of what people are doing in the options market, because when you test a
Yeah.
resistance or test a support, you will see PC ratio move inverse the way that you would think is bullish or bearish. So, like, you'll test a support
Yeah.
and, like, put call ratio will rise, because not because people are buying puts, but because people are selling the fuck out of the puts. And then, like,
Yeah, and they're
same
selling
thing.
them really far out of the money, so they're, like, really cheap.
Yep.
Because I'll look at, like, sorry, I've been looking at this too, so I'm
Mhm.
really excited to talk, because we haven't really talked about it, but we've been charting it ourselves for a while. But yeah, so you'll see, like, the price is going up and put call ratio spikes, but call premium is still over put premium, right? So everybody's selling a bunch of way out of the money puts, just selling the shit out of them, right? And then buying calls.
Yeah. They're not even buying that many calls. They're mostly just
No.
selling
Yeah.
puts. And, like, if you look here and you look into the end of the day, you can see, like, put call ratio is just falling, or, like, PC ratio is just falling constantly into close, and that's because everybody's just selling the fuck out of calls, and so the number of calls on the chain is, once you get below 1.0, calls outweigh the puts. Above 1.0, puts outweigh the calls. So, like, the number of calls on the chain is increasing, and most people would be like, "Oh, that's bullish." No, that is it is
Yeah.
not.
At the end of the day, no. Nobody's buying unless they're buying to close, but that is the only reason they'd be buying to close is if they're already squeezing. So if you see, like, that flat price action like that, and calls
Well,
are,
buying
and
to
the call
close is a
ratio is really
net
low.
negative on our call premium.
Well,
Well, sort of. It would
yeah,
cause
just let
call
me
premium to
so
drop.
if your put call ratio is 0.6 at the end of the day, and price action is basically flat like that, like, that's telling you people are selling open calls to close, which is not bullish. Because the only reason they would be buying to close is if they were getting squeezed, and so the price would be just going straight up.
The put call ratio of the new live data. Similar thing when you see the OI of a strike go up a lot. Depends where it is, but yeah. I assume you mean on longer term time frames, or you just mean the volume of a strike go up a lot? Yes, yeah. Similar, could be a similar thing.
All right, well, let's let Nimrod ask her question, since she's actually
up here. I don't know if
Yeah.
she's actually here. Thought she would have
I
talked
am.
by now. Oh, why didn't you say anything?
Well, I was waiting for you guys.
Oh, just interrupt us.
Yeah, well, he wanted to say something real quick. I'm nice. Anyway, so what was I gonna say now? Oh, the thing that you showed about Willie is making me think we have to add like a social feature where we're all required to just show the current position we're in and how long we've been holding it and how stupid we are, so that everybody else can shame us and tell us to sell. Because I think that might really help our trading strategies a lot. Because I looked at that and went, "Oh my God, was the extra $200 worth it?" To be like panicked all day, losing your money over and over again. Not that I can talk because I blew up all the money I had in my port today because I really shouldn't have been trading today because I was way too busy to do so. And then I lost more money than I wanted to lose, and then I'm like, oh, I can't sell now. Maybe it'll go back up, and of course it did not. And I just
I hate that. I hate
just
it. I'll
abandoned
do
it
that
and let it
sometimes.
die.
I'll like, I know I have to like go into like I can't look at the market for like hours, if potentially the rest of the day, and I'll still be like, what if it hits? I'll just throw it. Yeah, I've been
Yeah,
there.
I had to teach 2 classes, and I just really shouldn't have kept it. But it had already gone down like, slightly more than I was comfortable with, and then I didn't set a stop because I kept getting interrupted by people, and I'm just like, oh, okay. But so I'm not going to do that again.
Yeah,
I'm going to try really hard not to, because
just don't
it's
do it
really
again.
dumb.
Yeah,
I always, whenever I do that, I lose money. So it's like, why should I do that?
Yeah,
I should have taken my $20, my $40 this morning that I was like, oh, I could set a stop here, but I've done that the last 2 days in a row, and then it runs up another couple $100 that I could have made. So I should just be brave today. No, I should not have.
What ifs
Yeah,
will
no,
ruin your
there's-
port.
no bravery. Yeah, you gotta.
You're
you
either
gotta
profitable
what
or
you
you're
have.
not, and one of those you need to kill, and the other one you need to capture.
Yeah.
Where I
Protect
would have
what you
set my
have is,
stop initially would have been very, very good. I mean, it wouldn't have been much money, but it would have been a win. Yeah. Whoopsie daisy.
Protect what you have is a big thing that I've always struggled with.
Yep. Yeah, I'm really good with high volatility environments as far as like getting money and getting out. But when it's like, oh, it's dinkling along, maybe something will happen. I'm not very good at that. And usually because I don't have the ability to sell options because I either keep PDTing my port or doing something like that. So I always end up losing those accounts. But anyway, I had a question about the new indicator that you were showing today with the sigma measurement. I wondered what that, I don't really know what that part means and why it would have jumped so high.
Standard deviation.
Oh God, is this your thing?
Yeah.
God damn it.
Yeah.
I was just curious why it would have, like, because you said at one point it's like, whoa, it went up a whole bunch. I think it was up to 5.
Yeah, well, the candle closed at a 5 standard deviation move, but it was 7.
It's a 21 candle EMA.
It is not. You don't even know what it is. It's really not. You would actually. I'll talk to you about it later and like show you the code.
You know I'm gonna hate it. Why would you show it to me?
I actually think you'll love it.
Me, there's at least the air of mystery. If you show it to me, I'm just gonna be like, this is stupid.
You're not.
And I'll explain to you.
I think you'll love
how
it.
Exactly how it is precisely mathematically the 21 EMA.
It is not the 21 EMA.
So it's basically the total standard deviation move of a single candle based off of what the current price?
No.
Or something else?
Nothing to do with that.
Okay.
If he hasn't told me, he's not going to tell you.
Period. So we just don't get to know. Okay, that's fine. And then can you guys repeat the part you said about the put call ratio again, slowly and one more time?
Yeah, so if you hit a support or a resistance, major support, major resistance, large gamma level on the SPX, and you start seeing put call ratio trending down, you're probably getting a lot of sold calls out of the money. And if you start seeing put call ratio trending up, you're probably getting a lot of sold puts out of the money.
Okay. Okay, cool. That's good to know. Okay.
Oh God, oh Jesus. What's wrong, Kiko?
Oh, one more question. This was what I was actually going to ask. Was the when you are saying again today, like, oh, a whole bunch of puts just closed or a whole bunch of calls just opened, where on Gammastrike should we be looking for that? Just the bars on the side plus OI and volume ones, or where are you seeing that? That you see it so quickly and so easily.
Hello? Did I lose?
Hello?
Is this
Hello?
thing on?
I think I got cut off.
Oh,
Okay.
yeah, I thought I got cut off. Sorry, the question was what?
Neither of you were talking, so yes. Did you hear my question?
I didn't hear the question.
I heard like
Okay.
the very beginning of it.
I was just asking when you're saying all of a sudden like, oh, a bunch of puts just closed at 80 or a bunch of whatever calls just got bought, where are you so decisively seeing that? In the put call volume part of it all, or are you looking at the open OI of various strikes in a different screen, or where are you seeing that?
What?
Like that they closed, that you're sure they closed, or you're just looking between the IV and the gamma exposure suddenly changing? Like,
Oh, I just have different shit than you do.
well, I know, but where is it? I want to find it.
It's secret.
That can't be secret. Come on.
No,
Yeah,
it
but
is.
there's a lot of places like the one I just described, like at the end of the day, where if the put call ratio plummets, so it's like mostly calls that are being traded, and the price is flat at the end of the day, and it's 0 DTEs, nobody's gonna buy a shitload of out of the money calls at the end of the day on flat
No, I'm just
price
talking.
action,
I'm just
hoping
talking
that
about like randomly in the middle of the day where he'll say, "Oh, a bunch of those just closed," like before anything apparent has happened to the price action, really. But he sees those things, and I'm like,
somebody should
where am
go
I
back
seeing that?
through all the YouTubes and see what his actual hit rate is on saying open or closed on those, and see what the price does after that. Because we have some things that we've been. There are lots of things we play with that we don't like. That doesn't percolate up to you guys just because it's like we're not sure that it is actionable and reliable.
Mhm.
And that he's looking at some of those things as well, but I don't know how often he's actually right. I actually have stopped looking at that for one of those tools that he might be using. I just lost interest in it because it didn't seem to really tell me anything that I could use.
Wait, DM me which one. I'll tell you if you're right.
I mean, it's the only one that I actually don't even know if I can still access it. I haven't accessed it in so long. Yeah, I can't even open it. I it's an inference thing. It's like looking at a lot of these indicators on the live data that you're seeing right now, this new one that we're working on. You can kind of start to infer things like what is more likely happening here, right? So it's like mostly calls are being traded and it's the end of the day and the price is flat. Oh, they're probably selling. Those kinds of inferences I think are much more valuable than trying to like mathematically game out whether something is bought or sold.
Cool. All right. Well, that was basically what I had on my mind. So thanks, guys.
Okay. You're welcome.
Yep.
Yeah, no problem.
Also, I'm probably going to have to deprogram my husband somehow because the first thing he said to me was about Charlie Kirk was he had 2 children. I'm like, yes. Just think he's in the wrong corner of the internet.
Yeah, I just all I'll say about that is as somebody who is an asshole and spends a lot of time on campuses, which has a lot of overlap with somebody who just might have gotten shot in the neck. I don't like the idea that assholes on campuses are being shot and that is being normalized.
I mean, I don't think it's being normalized.
Is there
I just
trouble?
think it's like one of those things, like how Dirk was saying, like you literally say, school children
I don't
get
know.
at
Remember,
allow
remember
for
when,
my Second
remember
Amendment
when
rights.
remember when children at schools being shot used to be like things that people cared about like 10 years ago?
Some of those got shot yesterday.
Yeah,
Yeah, I
nobody
mean,
gave one single shit.
No, they
well,
just cared
that's what I'm
about the
saying. It's totally
YouTube guy who
crazy.
got shot.
That's
I mean,
the
I
thing that's
know if
crazy.
I
And
got shot on a college campus, you guys would care more about me. But still, I mean, keep
Like
doing
at
that,
what
but also the
like in
children.
10 years we should be like, well, another professor on campus got shot. It happens. Whatever. What are you gonna do? I don't want to live in that world.
I don't want to live in the world we are now, let alone that world either. But it seems everybody's just totally hating each other and going to extremes. But like hearing the right's response to that whole thing is just kind of insane because it feels like they're gaslighting us. I don't know, like you guys are so full of hate, and then this is your fault. It's like, wait a minute.
It is a little alarming. Both sides do that. Let's see where it lands in like a week or two. Let's because those two politicians from Minnesota got murdered like 2 months ago, and everybody's completely
Nobody
over
said
that.
anything about it. Nobody said barely anything about it. They're
no,
like,
there was
"Oh."
I mean, it definitely didn't rise to the level of what's happening now because it's a popular figure, right? I mean, that's a little different. It's like a celebrity more than anything, so it's a little different. Let's see where everybody is in like a month.
I don't know.
Yeah, hopefully we don't start rounding people up for their thoughts, which seems antithetical to like the mission of
We're-
Charlie Kirk, right? His whole stick was people should be able to say what they feel and have uncomfortable discourse, right? I would imagine that he would be very against this idea that we just need to round people up for the terrible things they say.
I
And yet
think
all the
I think
people
he
that
would
are
be okay
supporting
with it
him-
as long as the people getting rounded up were not white Christian males.
I
You know
totally
what?
agree.
I'm
You know-
I'm trying to not speak ill of the dead. I don't know
Oh.
the guy, but
I don't know him either, but I also don't care about him.
I don't know. I just read a bunch of stuff that he said, and I'm just like, so he was actually trying to take away other people's rights. But
It's
yet-
wild to me that
Yeah,
this is the first
on-
time Jay Fresh has chosen to not be an offensive asshole.
well, again, asshole on campus. I don't want to get shot.
No one's coming for you yet.
Okay. Well,
Until they read
I
your
will say on
post
the
about AI.
on the flip side, like you also it's okay if you don't care, right? I mean, nobody has the capacity to care about everybody on the planet, and millions of people die every day. Like you cannot care about all of it. So
Yeah.
if
Well,
you
but
don't
that's
care,
why I
you
feel
don't
like
have
it's
you're
disingenuous.
not obligated to care. If you do care, care and care in whatever way you need to. But if you don't care, that's human nature. That's okay. It doesn't mean
Yeah,
you're
I just think it's disingenuous that people are like, oh, I really, really care about this, but oh, all those school shootings and the other senators that were killed and all this other stuff, meh, I don't care about that. But I do care about this one dude who was saying mean things all the time. Just seems silly.
He
But also,
he fucked
It is a
around
little
and
silly.
found out. It's just like
that's what I
that's the
think.
risk
That's what
you
I think.
take when you're a public figure.
Especially saying
yeah.
incendiary things all the time. But
Yeah.
I think ultimately the only reason people liked him is because people love it when there is a white guy who says the kind
Yeah,
of
but he's not-
secret shame things in your head, like reasonably and confidently out loud, so that you feel better about it. Like, see, he's a perfectly reasonable human being.
will-
He's a family.
okay,
He's a family man.
I'll try to keep my reputation and say something a little non-PC here. I actually thought the one-liner that I saw the other day, I think it was last night, it was just a quick tweet from somebody. It was peak comedy. And comedy is good. It helps us work through hard situations, but this is what they said and I just thought it was hilarious. Well, I guess he lost that debate. It's so terrible, but also there. I could actually break it down. There's
Did you see that one meme where it was a picture
There's
of
a lot
him
of
and
it
it says
funny.
anti-vaxxer finally gets shot?
see, that one's less funny to me. I don't know. I also don't know a lot about what he said other than like a few things that I don't know. I just listened to him. I was like, he seems like young me, who was like, because I used to be quite right wing when I was younger, and I was very full of myself. He seemed like me when I was like in my early 20s, and I just don't think that person was actually very smart or insightful or pleasant to be around. So I just kind of tuned him out.
Well, The Guardian has a nice summary of some of the horrible things he said, if you're curious. But
I just literally never fucking heard of the guy until yesterday.
I have
I
no
think
doubt in my mind he said a lot of stupid shit. As
But
anybody who's
now I
up
do
for
want to
president
take my
has
show on the road and just go sit at stock exchanges and make fun of professional traders. I'm just
But
gonna
no,
set
I
up a
mean,
tent at SIBO.
I don't like that we're shooting each other because we
No, I don't
disagree.
either.
That seems bad.
As an
I
anarchist,
don't like.
I kind of love it.
Oh God, I don't like that all of our supposed norms and mores and functions of government have broken down to absolute chaos. And so the fact that
Yes.
we make any kind of meaningful, like, hey, we the people don't like this, and they're like, fuck you, we don't give a shit. So
The-
like, then what is the other option? Like,
The
is
only
it
way to
violence?
reorient
And
the
if-
power structure is to tear it down.
and then you do that presumably by violence, which as an anthropologist of who
Yeah.
studied peace and warfare, I'm just like in my own nightmare right here.
This is exactly how it happens. It's beautiful. This is the natural progression of human
All
society.
right, I'm gonna slowly disassociate myself with this conversation. I've already gone far enough.
Oh, well, as long as I had like a perch to watch it happen from a distance, it wouldn't be quite as bad. But no, it's actually horrifying. I don't know.
Yeah, it's.
I was raised by idealistic East Coasters with a long line of Revolutionary War ancestors in my past, so I'm just like going like, oh God. Like, this is not what this country was made for, even though the country has done lots of horrible, awful things. But
I will say this is kind of what
theoretically.
this country. I will say this is kind of what this country was built by actual crazy people, which is kind of the beauty of it. Like only the people who are insane enough to risk life, death, and like disease
What about the Dutch?
to like completely restart their
Well, they're
lives
they're
in
just
like the
extra-
in the fucking woods.
Well, when you
Like,
think about it,
those
it
people
wasn't
are all
much
insane.
different because essentially, like a lot of people in Europe, in well, let's say England, were actually living in utter poverty because if you didn't have land, you essentially didn't have anything unless you had some kind of mercantile interest. Otherwise, you were just kind of homeless on the streets of London type of thing.
Sure, but how many people live in poverty in Mississippi right now and just die there?
Well, it didn't go well. It didn't. Mistakes were made.
So many
It
mistakes.
My point
doesn't have to
is
be
that
like that though.
my point is
Why
that
are we letting
the
enormous?
reason our country is successful is because the Atlantic Ocean was such a huge barrier to entry, and so only the most driven, most insane people came here.
And now we're just resting on our laurels, and it's all going down to decay, like the
Well, I mean,
life cycle
you look
of
at like what's the
and
current
bureaucracy and decay.
Atlantic? It is,
in essence.
coming up from South America up through Mexico to get here, right? That's like the future of America to me because that's the new insane group of people who are willing to like surmount this massive barrier.
Well,
to
and when you
start
look at
over.
all the people that are actually starting businesses in my community, and we have a lot of immigrants from South America, it's like all of these great new businesses are being started by people from there, or
Yeah,
second
because they're all insane.
generation immigrants.
They're all driven and insane enough to think like, oh, I'm just gonna like struggle through the jungle for 3 months and swim across a river and then face like persecution just for a chance that I can open up a fucking taco truck. Like they're insane people, and it's exactly who we need to continue our great tradition of insanity.
Well, I met like an Indian American who was probably second or third generation here, and he opened up this beautiful play center for my children. And he's like, "Hey, you want to collaborate with your business and my business?" And I'm like, "Hey, this is awesome." But did I have the gumption to let's start my own business and get funding? Not exactly. I'm doing it on the low end, but yeah, it's just amazing to me that more people don't value the contributions of immigrants. But I
Just because
guess, you know,
they want to forget
I've
that
lived in Michigan.
they were also immigrants at one point.
Yeah, which is crazy because, like, you know, half the country identifies as Irish, and most people know about the "No Irish Need Apply" signs and all that. So it's like, is this really that difficult for you to understand? Like, this is like your great grandfather. It's not that far away, but people are pretty short sighted.
So were the Irish. So were the fucking. What do you think the Pilgrims came here with a lot of money on their? Have you ever been on that fucking boat? They had like 60 people on it. It's the size of a fucking dinghy.
I was at Jamestown recently. It was pretty entertaining to see how horrible it would have been. But yeah, I'm related to the first governor of Massachusetts. From like the younger brother that came over after the Mayflower. So yeah,
I'm
those are my
related to James K. Polk. Manifest Destiny, baby.
nice. That's no troublesome past there.
I'm related to the
no, just
Medicis.
ignore. Oh, you would be. You
Yeah,
fucking
like
Italian.
directly.
I have
What's
a
the
castle.
derogatory word for an Italian? Is it
Guinea wop, something like that.
Daywop?
Dago.
Dago.
Dago. There you go.
Yeah, but Guinea is like the one.
Hmm.
Yeah, because they would work for like a guinea or whatever, something like that.
Yeah.
Doesn't sound that creative.
It was like, well, you know, they just like there was just like a lot of white people, and they had to be racist against somebody, so other white people. So have you ever been to have you ever been to Asia? Racism in Asia is wild. They're like, oh, I don't like those people from that town over there. Fuck them. And it's like, what? It's like the town won over from them.
Well, that's just like England being like, you know, oh, those foreigners over there in Kent, and they're like in Sussex, it's right next door.
Yeah, I just don't like that part of town. That's just elitism.
No. It's like they think they're like a different like societal class or like race from them. It's insane.
Yeah, well,
I never understood it till I hung out with a lot of Chinese people, and it's just wild.
well, regardless of your race, religion, or creed, Gammastrike is $69.99.
We're equal opportunity shelling.
You know, I think it is like a I don't know, maybe it's just a conscientious librarian museum person thing, because me and Jen share a profession kind of. But neither of us were like, we can't maintain pigeon whales, so we really can't join, even though we'd really like to get in on the beta. But since we can't keep in pigeon whale, we really shouldn't join the beta, because that would be dishonest.
That beta is closed.
I know, but I'm just saying, we both did that at the time. We decided not to, and everybody else was just like, I'm gonna pay per hand. And we were like taking it seriously, like idiots, I guess. This is my poor people decisions. Now I'd have to pay 100 and whatever it is a month if I want to keep it. It's just funny to me that I made that poor decision.
Jen's throwing you under the bus in chat.
She's throwing me under the bus. It's true. We talked about this.
To be fair, the pigeon whales that signed up didn't even know what they were getting. We had like a whole pitch meeting with them. And we're like, this is what you're doing, and you guys can fund it if you want to. And they were like, let's go.
Alas, alack, if I had sold GME when I had doubled my money, but I didn't.
Arugus, have you thought that this might be why you're not making money at the market?
Yeah.
Jesus. Yeah, I was actually really surprised by the number of people that started joining the pigeon whale so they could get in on the beta. I thought we'd have a harder time.
No, everybody wants exclusive access.
We've definitely not taken it for granted. We've spent a lot of time thinking about, like, we just assume that like there's a lot of shit you guys hate, but you're just not telling us because you're nice, and we're just like, all right, What is it they probably hate, but they're not telling us? We spend a lot of time thinking about that. So
No, it's
Nuke
just that it's so beautiful and we can't understand sometimes, and we're just like, wow.
right now, Nuke is doing like 2 weeks worth of work in 3 days in order to persist like just this little tiny data set so that the charts
little
don't
tiny, it's big.
yeah, it's huge, but like just so the charts don't look weird.
Thank you, Nuke.
He's not here. You're speaking to nobody. He's busy. He's doing the work.
Pretty cool. Yeah, you guys are awesome. Just thanks for making this place.
Yeah.
Yeah, we're having fun.
Yeah, it's a good time. Does anybody else want to ask questions about? Oh shit, we got someone.
Ooh. Okay, bye guys.
Later.
See ya.
Thanks for the questions.
No problem.
I'm looking for pigeon for the vibe trading. They realized it was mostly shit I couldn't do without margin. So there's that. What? So much of it is just like long puts and calls.
What's happening, guys?
What's up, dude?
What's going on?
Anyway, back to Gammastrike.
No.
No?
You don't want to talk more about school shootings for another 30 minutes? No, let's get back to GS.
I was in one, so it's not really fun.
Fuck, man. It's my
25 years ago. So I kind of have to disagree with your statement about people caring about it 10 years ago. I don't think it's been 20 years.
been longer. It's been longer than
Yeah.
that. Yeah. Well, I'll give you that.
What happened?
Anyway,
20. Wait, what happened 20
bullshit
years
from my
ago?
past.
Yeah.
Anyway, I want to know about skew in the volatility page.
Ooh, shit.
What we can do with that.
What's happened? Oh, there it is.
Something. He's probably flushing the pods.
Yeah. I frequently wonder why they pick when we're in the middle of streaming to
Yeah.
roll shit,
It
but they
failed for
do
me
it.
too. They're flushing a pot. They're flushing the pods. Mother trucker.
All right, there's skew. That's pretty cool.
So what can we do with it?
Well, JFresh, you made it. Do you want to talk about your baby?
You told me to make it. No,
I
I'll
know.
tell you. So skew. Yeah. So if you look at, and this kind of goes back to all the questions about like bought sold. So you'll notice that the word skew has popped up before on our website. It has showed up on the Greeks page with Dexa and Gexa skew adjusted values. So what skew is telling you is it's telling you the relative demand for puts versus calls. So there are a couple ways to calculate skew, and we chose a way that we think is more robust to just changes in volatility. So like high volatility versus a low volatility environment. So it kind of controls for those changes and just tries to tell you, are puts more expensive or are calls more expensive? Basically, is demand for puts larger than demand for calls, and how much so? So if you zoom out to a longer time frame, because right now this is pretty flat. So there's a couple of places where there's some uncertainty in the volatility curve, but basically you can kind of see like so the skew is positive, which means that
Where'd you go?
calls
You're really
are-
far away, or your mic turned off.
Oh, I scooted so I could see
Oh,
the. Sorry. So the skew is positive generally on the SPXW, which is telling you that in that case calls are actually more desirable than puts. And then typically what happens is so this is a little bit confusing, but it actually tends to invert price action. And the reason for that is like people buy options to anticipate future moves. So like in 2021, as skew started to go really negative, right? That's people starting to anticipate, hey, the market's kind of getting pretty high. We're going to start getting downside protection, right? And then as during 2022, when we started realizing all this volatility and prices started going down, people started saying, okay, well, I think that this is going to turn around. I'm going to start placing more bets to the upside, and so demand for calls kind of shows up as the market starts to bottom. And then as you go along, you kind of see right into like 2023, like well into there was still a lot of volatility. And then it wasn't really until Yellen shortened duration at the end of 2023 that you started seeing the current trend. And so if you kind of ignore some of those peaks, some of that noise just comes from the fact that the tails of the volatility curve have been noisy at certain times, especially during big volatility changes. But the long-term trend has been slowly down, right? And so what that's telling you is that people are actually willing to hold a little bit more insurance to the downside, and that's just been growing over time. So that's what skew kind of tells you. Skew gives you a sense of what is the relative demand for calls versus puts on a longer term. And you could pull up some more tickers and we can talk about them if you can. I still can't get into. Oh, yes, I can. It's rolled. Maybe not. It's not loading. All right, let me.
I mean, I can go into some like reasons that skew is important, but a lot of it is centered around option pricing, and like if skew is the more negative it gets, the puts become I hate using like vol-desk terminology, but puts become richer than calls. Not necessarily overpriced, but higher demand. They then usually become overpriced, but first they become what they refer to as being more richly priced. And then when skew steepens, you want to use spreads because you reduce your exposure to IV. So it's good to pay attention to how steep skew is getting. And it helps you locate zones where price is going to pin or slip. And it also can tell you a lot about the market's expectations for future moves. So like right now we're in an environment where like near term skew is kind of pinned, but like 30-day skew is kind of is kind of like a little richer on the put side, and so people are looking for downside protection further out, like in the 1 month out window versus the near term window. And that can kind of tell you about like how to there's specific trades that are just for like just for skew, like risk reversals and like diagonals, calendars. Dispersion trading is all based around skew. You know, when you have like when index skew is really rich versus single stocks, you know, you want to short the index vol, long the vol on the underlyings, and then, you know, vice versa. When vol is really high in the single stock names, you know, you want to short the index, or well, as vol, you want to long the index vol because it's gonna move back the other way. But you get a lot of like really good relative value trades tracking skew. You can look for demand for crash protection as you approach large events. So, you know, if you see event vol spiking in the term structure, that might give you some idea of like the pricing for downside protection relative to an economic event. What else? I got them all. I feel like that's most of them.
Yeah. No, I mean there's a lot of good information that it tells you, but really, I mean it's a useful measurement that is pulled from the larger IV smile, and then tracked over time to kind of get a sense of what was the shape of that curve in the past, and presenting it in a way that doesn't make your eyeballs bleed because it's just so much data.
Yeah, and this may not actually be the final form that we present skew to you guys in, but for now it's fine. But we may pull it out of the volatility chart where it's a little weird, but it's helpful to be able to look at skew and then, you know, like IV10, HV10 relative to each other, IV30, HV30 relative to each other, in addition to the skew metric.
Yeah, we just gotta fix the zoom the Y auto zoom.
It
which
does
is
zoom a little weird.
driving-
Yeah.
Notice that.
Believe me, it's on the list. It's driving me insane. It will be fixed.
But that can tell you a lot about, you know, volatility trading, like, you know, if you skew in a positive carry environment versus skew in a negative carry environment, and how participants in the market are reacting to those environments. You know, is HV greater than IV? Is IV greater than HV? You know, those are your positive and negative carry signals, and then you can, you know, look at skew and determine kind of the steepness of that, and it'll tell you a lot about how market participants are reacting to that volatility environment. Are they shorting the put? Are they longing the puts? And you know, you can tell a lot about like downside continuation. You can tell a lot about risk reversal. So really super valuable tool, but kind of complex, I guess. I mean, a lot of it's
Well, it
just
sounds like we should
relative
be using this
steepness.
in conjunction with DEXA and GEXA as well.
Well, no, those are exposures weighted by skew. So I mean, the purpose of DEXA and GEXA is to give you an idea of like the quote unquote boughtness or soldness, yeah, of the chain. Um, and you know, skew does that, but like with IV, you're gonna have to kind of do the weighting a little. It's a little more cerebral in its application. Whereas DEXA and GEXA are a fairly simple application of skew.
Okay. All right.
When
Well,
skew docs page? Great question. JFresh.
Is skew on prod?
Yeah,
We pushed it.
that's how I know about it.
I pushed it. Yeah.
Yeah, I gotta write it up. I'm also writing a bunch of other shit for work, so throw it on the pile.
When you get the bandwidth,
Yeah,
we'll get there. For now, people can still
obviously
Google shit,
it'll be done.
right?
Yeah.
All right, cool. That's all I had, guys. I appreciate your help.
Yeah, man, no problem. Happy to help.
All right, thanks.
Anybody else? Willie, you want to wrap it up for the night?
I do love that all of you are demanding that it shows up in the docs. It tells me that you care about the docs that I have written.
They
Makes
love
me
them.
happy.
It's very quickly becoming like one of the better sources for options information on the internet. So
Yeah, I shit that out in like 5 days. No, that took me a long time to write, actually.
it did. I was gonna say you did shit out a fat chunk of it in 5 days at one point. But I think that was when your wife was
Yeah.
on vacation or
It might have
away.
been, but that was like 4 hours a day too.
Did you say demand was based on option pricing? It can be, yeah. Like, do you not like to buy cheap options? I do.
Yeah, so it can be, right? I mean, that's sort of been one of the central theses, not feces, theses of like everything that we've been doing lately is that the options market has become large enough that the hedging of the options is driving the underlying pricing. If that is true, then the price of the options is a signal of demand, right? If it's not true, if they're just pricing, just passively pricing based on what prices are in the market, then it's not necessarily a measure of demand so much as it is a measure of market maker risk. In reality, it's a little bit of both.
Yeah. No, it's a bit of both. Oop. There we go. What's up, dude? What's up, dude?
Hello, can you hear me?
Yep.
Yes.
Yep. Yes.
All right. So I was wondering if you could add something to the scanner where you could say like delta neutral above gamma neutral or gamma neutral above delta neutral or stuff like that.
Like
Could
you
you
want to
do something
specifically
like
look
that?
for crossovers?
Yeah, or
Or
events
cross
where like
unders?
gamma neutral or delta neutral is a certain amount above, one of the other neutrals.
That's intriguing. I like that.
That's actually a scanner that we have. Oh, your phone's like feedbacking.
That's
Oh,
kind of
what?
cool.
You just like to hear yourself.
Yeah, I don't think I can control that. Should I turn on the voice canceling?
That might do it. Yeah, like the noise canceling might stop the feedback.
Boo boo woo woo.
Yep, there it goes. That's perfect. Yeah, so that's actually a scanner that I had planned. Its value is kind of relative though. So it was, I think we talked about it a long time ago, but that was mostly the reason that we didn't make it one of the initial scanners that we built. Scanners aren't too hard for us to build though. And it's definitely one that's in consideration. So I would say that, yeah, it's definitely possible we can do it. Might not be right away. We have some other stuff that we want to get done first, but since scanners are kind of low hanging fruit for us to dev, usually, then we'll kind of just do them when we have like some downtime usually. So yeah, maybe like over the next year we'll be able to get something out like that.
Yeah, that's a concept that caught my attention because we talked like a couple weeks ago or something, and like delta neutral above gamma neutral was, kind of a more, something that you would more desire for something as a short setup, So I was like wondering if we could find
Well,
more
if it's
stocks.
see, the thing is it's not that delta neutral above gamma neutral is a good setup. It's that delta neutral crossing to the upside of gamma neutral. And so, the tricky thing about building this scanner is for it to really have value, it would need to be like tracking the change in price over the prior days, or like the change in the neutral over the prior days, and see like directionally which way is delta moving versus which way is gamma moving, and the building out the logic for that actually might be a little bit more complex, especially if you're gonna like be able to choose pairs. But yeah, there's like a
How
lot of
little
like
faith you
twisting.
have in me.
There's a lot of like little twisting that goes on between DF and GF sometimes, especially on really bearish stuff, and then on big reversals of bearish things also.
You're trying to make this a challenge to get my interest to make me want to make
What?
it.
I would never artificially inflate the complexity of a scanner in order to get you to try to build it.
All right.
It won't work.
There was something I was like giving you about earlier. Did you see them? It was about Oracle. Did you see those PMs?
Yeah, I think I did. Specifically regarding the options chain.
Yeah,
Yeah.
I gave an update.
So
in,
yeah,
Gamma
Oracle. I mean, Oracle still has a single delta neutral. Remember that delta neutral and gamma neutral, like those are not a derivative. Like they're not they're not part of exposure. Exposure is separate. However, yes, the exposure curve does have multiple neutral points and 2 maxes. But that's because the options chain has become bifurcated. This happens.
Oh, jeez.
But yeah, this
Sorry,
happens.
I'm looking at the gamma curve of Oracle.
Are you looking at the Gex curve or the gamma curve?
The gamma
All right, I think the Gex curve is still just got one neutral, but yeah, and this is a very extreme scenario because you're essentially getting 2 separate options chains that are coexisting on one equity, because prices run up into all the new upside options that have just opened, but that leaves all of the downside options kind of dead and decaying. I've found in these scenarios, like the best way to approach analyzing that is to just look at where price is not going back to that prior max. Like you can kind of just mentally just chop off that whole part of the chain. It's very unlikely to return there until those options expire out and the chain normalizes again.
So kind of like charm exposure. It's just going to keep the price above that.
Yeah.
And then it may just drop right back down to where it was before.
Well, the reason being is that because to the downside of spot, gamma rises, which is kind of makes it really fucking hard for the price to move down.
Yeah, that was my main question.
Yeah. It's very difficult to move that way on a curve. I mean, very similar to like when you bottom out on gamma, it's very hard to keep going down because below that point gamma goes up. Like gamma exposure goes higher.
This looks like a situation where people are going to want to short it because it went way up.
And they're going to get fucked.
They're probably feeling pretty good right now because it went down today. But, maybe it'll hit like 300. I mean, maybe if they're really lucky, it'll get up to that like second neutral.
Here, I'll pull it up on screen so everyone can see it.
But then it's going to like rocket right back up the other way and it's going to go back to 330. And, yeah, it just seems like people are just going to get chopped up between.
Yeah, everyone's going to try to go long and short this. And everyone's gonna get stuck in here until there's a major expiration.
Yeah.
This happened with GameStop too. GameStop got trapped between its bifurcated chains for like a couple months after the whole DFV thing, like DFV coming back. bifurcated the chain, and then after the chain got bifurcated, price fell back down into like that like 27 to 32 level and just fucking just got stuck there for ages until it fell, like months.
Although a shitload of stuff is falling off on OPEC, so we'll see. But there's also a lot of stuff in October. I would have to see how much is October versus. Okay, yeah, so there's a huge amount of stuff lower that's October. Yeah, so you gotta be careful.
Yeah, these are actually really bad, both to long and short, because price tends to just get stuck. But over time, and it doesn't get stuck in like a very beneficial way, because over time this bottom can shift based on market presence, but it becomes a lot harder to read. Like price isn't probably going to go back up here. It's probably going to have a hard time getting out above that. But it is going to oscillate, and then also that center point is going to shift. So the price, like the price to which spot is drawn, is going to change, and you have to like. It's not untradeable, but it's not a normal, like a normal trade by any means.
Yeah.
And then eventually that hump is going to expire, and then the bottom is
Yeah,
probably going to be...
eventually this is going to, normalize, and you're going to get, like your standard, like, gamma curve. And all of this shit is going to disappear.
So what I'm kind of thinking here is that since, I don't know, I guess Gex neutral, it's kind of weird that the neutral level in Gex is not 325, but it's like 307.5. How did that happen?
Which one?
The Gex flip. How did Gex flip end up being
in between strikes?
307.50? Yeah, I would think Gex flip would have been like 327 or something, somewhere around there, but it's like at the in that like concave motion. I don't know how it got there.
Oh, it may be. I mean, this may be having a hard time finding the low point because of the other low point, but
yeah. So
because technically the Gex flips are here, here, and here. Like these are these are now where gamma flips. So there's 3 of them, and this just doesn't know where to put itself, honestly.
Yeah, there's some things too with how we solve for these. One is normalized to gamma, like raw gamma, and one is to gamma in dollars. And those can actually be quite different, especially if you have a huge move. So sometimes these things can kind of break a little bit when you have massive moves like this. So we'll look into what it's doing here, or we'll review. And
I mean, the other problem here is there's really no right answer as to where the flip is.
Yeah, there's like, 3 of them.
There's
yeah,
3
so
of them.
one.
So yeah. You can see where they are visually, but having something find that algorithmically is very hard.
Yeah. Yeah.
We would also have to create logic in the program to have more than one flip, which it doesn't have right now.
And that's why we just show you the whole curve. So if you're in doubt, you can just see the whole curve, and you can do all of that in your head, right? You can look and see, oh, 0's about right there.
Yep, and this is Gex. Is there an actual gamma curve too?
So when you say gamma curve, that can actually mean a few different things. Can you you just mean like this curve, but just raw gamma?
The gamma used to calculate gamma neutral.
Yeah. So we have it, but we don't display it. We've chosen to display it in nominal values or in dollar values. And the reason for that is because that's what really matters in terms of like buying and selling pressure, is how many dollars is the market maker going to have to put down
on the table, keep their books clean. So
Yeah, as far as buy sell pressure goes, and how gamma affects the dealer's book, this is a more this is a more like realistic way of looking at that.
All right, I see. So if you look at the trader dashboard, there's just like a part of me that looks at Oracle right now, and it just seems like it's just going to like crash straight down to delta neutral or something. But
no,
we
I
we
mean if
might
it
have to
does,
wait for that
shorts are going to
those
make a lot of
pockets
money,
to
but
expire first.
Yeah, it's probably just gonna get stuck here above its gap up for like some extended period of time. Also, Gamma Max is still rising. And like Delta is becoming more bought still, so it's very likely that this bounces back towards that like upside range.
yeah,
Yeah,
I
you
would
kind of
say
confirmed this for me a bit ago. Stocks, when Vega neutral is just flat, that means they're probably not really buying many puts or anything. But if Vega neutral is rising towards spot, that means they're buying puts. So,
Generally
what?
out of the money puts. So on equities, like, Vega neutral is always very low, usually well below spot. But you will get instances on equities where you see Vega neutral move up, and that's usually bearish. That's usually because people are buying longer dated puts on it, and like the sentiment in the market is shifted. It's very very rare for you to ever see VN replicate what you see on indexes on an equity.
What
And that
about
has to
like
do
in the
with
case?
behavior because MMs sell puts to hedge. So, like PC ratio on indexes is always much, much higher. And you get a lot of like Vega above spot. And so you end up with Vega neutral far higher than you see it on an equity. Whereas on equities, everyone's just selling calls. On indexes, people are buying longer dated calls, so you get a lot of upside Vega that way, and then you also get, a lot of put selling below spot, or at spot, and sometimes you even get it in the money, and that also keeps Vega neutral elevated. But
All right. And what does it mean when like Vega neutral is above spot? Like on like AES. If you go to AES and then zoom out, you can see that Vega neutral was way above spot and it came towards spot. What does that mean?
this might just not have enough liquidity on the chain for it to matter. Like, there's probably just not a lot of Vega on the chain, so you're getting just null values. Like, see where this like is just like a straight line up, and there is no Vega neutral. Like,
Yep.
a lot of this is like sometimes people carrying far out of the money calls. But like this kind of behavior is generally something you only see on an index. If you see it on a single stock equity, there's usually something wrong. Like either too many participants are carrying far out of the money calls, which basically have nothing to do with spot, and those have like a decent amount of volatility exposure. Or there's like an excessive amount of out of the money vol selling at longer dated periods. I think if you could look at like GME, you can kind of see like that was GME was a stock where there used to be a really huge amount of out of the money vol selling on it, and I think maybe if we go way back, there was like back here you can see where like during the squeeze where all of those out of the money calls got sold, and you see what it did to like VN, but then VN kind of normalized afterwards. And now it's very like kind of very far from spot. But here you had a lot of out of the money call selling when DFE got back in. Not nearly as much, but and now you're kind of starting to get it again, which is maybe bullish. But yeah, that rise in VN is definitely you're seeing an incentive to sell calls out of the money and longer dated ones. So usually like if 90-day IV spikes hard, you'll see VN move up. Because I mean, if those options aren't at spot, you've got to pack on quite a lot of volume in order to get any substantial amount of move in Vega. And some stocks just don't have enough Vega on their whole chain for it to matter at all. So that's one of the reasons like we don't put Vega neutral in kind of like the same category as we put like delta neutral and gamma neutral, because it's got a lot more complexity, and there's a lot of
Yeah, I've
implications that have to be adjusted for.
a decent rule, like, so I'll look when I see something like AES and I see kind of Vega neutral doing the little noodle dance. I'll look at a couple things. One, I'll look at the price, right? In nominal terms. So it's, $12, $13. There's not a whole lot of range between that and zero. And so volatility, so the high vol out of the money is not going to be extremely clean just because you don't have a huge range to build that position in nominal like dollar terms. The other thing that I'll look at is DEX, right? We're talking about total delta on the chain of like $200 million. It's nothing. So this is teeny tiny, which kind of tells me that there's probably liquidity issues with calculating the Vega neutral, because remember Vega is mostly out of the money, right? So you got to have really wide tails to get a nice clean distribution. So people love, stocks that are hundreds of dollars or thousands of dollars like the indices, because you can still get all the way down to $1. You can get real clean Vega plays on those kinds of stocks. Whereas these smaller stocks, you because you don't have that range, getting pure vol plays like clean vol that's not super sensitive to price is much more difficult to do.
All right, I see. So you basically just want to bring more weight to things that have higher amounts of delta and gamma exposure, pretty much, because if not, then you're kind of susceptible to a lot of outliers. And
Yeah, so if I go, let me just, we'll see how this works out. So yeah, if I go to the OI if I go to Greeks by Strike for AES, um, you know, the strikes go all the way down to 2, but most of the options on the chain are from like 8 to 13. So the puts are from 8 to 13, and then the calls really only go up to $15. So there's almost no range, which means if I look at the Vega, yeah, there's just like mostly like, because there's more Vega on the few puts that are there, that's gonna push Vega neutral way up. So if I do net, yeah, it's just illiquid Vega.
all right, I get you. So mainly, the more interesting thing to look at would be high gamma stocks, high delta stocks that have like Vega neutral that's either flat, and seeing what that Vega neutral is doing
Really, I
related
mean,
to
biggest
spot.
thing for that, the biggest thing for that is a really liquid chain and really wide wings on strike. Like you want something like, something that's like $200 that also has a $2 strike. That's where you can get some real clean vol, right? And so that's where it's more likely that people are going to put significant vol positions on, because it would be very difficult for me, right? Between the strikes of 8 and 15, it would be really difficult for me to build a position that was only sensitive to vol and not sensitive to price, right? And so it's unlikely that the positions that are there are volatility positions, they're directional.
Mm.
And so if they're directional and not based on volatility, then indicators of volatility are probably not going to be all that useful, because the people that you're betting against aren't playing volatility.
And I get you. So would Upstart be a better example of just like something that's breaking through the neutrals and then VN is rising towards it?
So
This is definitely better. I mean, it's got $1 billion on the chain. If I go to OI, I do like that it has, so this has puts all the way down to 12, which is significantly below. And it's got a lot of calls up at 135. So there are people playing ball on this chain. And I would say from a nominal perspective, this maybe is like 5-ish percent, 5 to 10% of the chain in terms of like cost of contract. So maybe, maybe 5 to 10% of people are playing pure volatility on Upstart.
All right. So there was one more question I had about like
well, hold on. I was
dispersion.
gonna add to that a little bit because this might bleed into your dispersion question. Remember that on equities, especially things like Upstart, GME, low liquidity options environments, market makers are exposed to right tail squeezes. So MMs tend to be short calls and short gamma, which means they're short calls, so they're short gamma, short vega on the upside move. And their profit and loss is concave on rallies, so spot up, vol up, which means that the MM loses on gamma and vega in the right tail squeeze. So that's where their risk is. And so, that's very different from indexes where like squeeze risk and borrowing constraints and uneven demand are not the issue, because on an index, you have spot down, vol up, spot up, vol down, and so dealers tend to be, they buy, well, institutions buy downside puts and sell calls, which gives indexes really very strong negative skew, and they're constantly in contango. And so like the market maker book benefits from long upside gamma and short vega. And so like when correlation, like on indexes, when correlation spikes on sell-offs, and structural demand for like crash insurance increases, that concentrates the MM's concavity in the left tail instead of the right tail, which is what you have on individual equities. And so that you're kind of seeing all of that play out in the positioning of vega neutral in single stock names.
All right, so it's basically like a distribution of volatility exposure.
Yeah.
All right, so there's one thing I've noticed. So like you, at the end of the day, you often like show like the correlation like of the VIX and cash VIX, but like you have some sort of indicator. I was like before it, but I couldn't really
VX.
find
It's
it.
VX and cash VIX. So 30-day vol versus the future spot price. And yeah, I basically just created like my own correlation index for that because it's one that SIBO doesn't have an index for. They don't measure directly. So, and I wanted that correlation because I think it's important.
So it's just not something that I can like enter as a spread on TradingView.
No. It's a correlation matrix. So you'd have to, it's kind of complex.
Are there any other ways to track correlation? Could a way to track correlation be?
I mean, you could measure the spreads, but they're not gonna tell you much about correlation. I mean, they'll give you part of the information in that sandwich, but not all of it. So I mean, but you can track backwardation and contango between the variable assets, which you could also do with like using several spreads simultaneously. And you can kind of get an idea of the term structure of volatility across multiple assets. But it's definitely not something easy to build. I know it took me and Dork made it, and it took quite a while to get it right.
Could it be implemented to Gammastrike on the volatility page?
Probably, yeah, it's something we want to do, but we need to pull more data sources first, because like right now we have we have tickers, but we're not piping in like a lot of like the other like SIBO data that's printed, and so we would have to build it out in that environment, and then we'd also need those data pipelines, some of which are CME, which is why I have it in CME and ICE, which is why I have it over in TradingView and not on Gammastrike. But building that, it's not hard to build. It's just a bitch to get all the data services that we would require to build it well.
And I'm assuming the short position on core 3 month or in 1 month is the best way to track dispersion breaking down or building up.
Yeah. Core 1 month and 3 month are really good for just tracking overall dispersion, like a macro look at gains and losses and dispersion.
Yeah, would there be anything in between that would be useful, or in like front running it a little bit or something?
No, not really. I mean, if you understand dispersion, it's pretty easy to front run because it does have kind of lower and upper bounds, because the market becomes more and more heavily incentivized to back out of the dispersion trade the lower correlation gets. So, if correlation's like historically bottoming out, that's generally probably a pretty good time to go, like short indexes or like long index vol, short underlying vol. Because like equities are probably going to bleed and index vol is probably going to rise, because there's just like, the thing about dispersion is like it's great when there's a huge spread on it and correlation can drop a lot. But then like once all the meat gets eaten off that bone, there's nothing left. And so then what happens is like everybody keeps risking on into the trade that's been winning for however long. And sometimes those periods of time can be quite extensive, like 3, 4, 5, 6 months, where you just have constantly dropping correlation. And everyone's just sitting at the dinner table and feasting on that one trade because it's yielding, right? But the more people show up to that party and latecomers come to that party, the more overcrowded that trade gets, the more the yield reduces, and then it backfires, and everybody who gets into it is now stuck in a pain trade until things mean revert. And sometimes volatility, like 2021, volatility can stay elevated for a very, very long time. Like all through 2021, 2022, volatility was quite high. And the people that got trapped in dispersion going into the like OPEX crash, those people were just fucked. I mean, some of them fucked so bad that they never got back out. Other ones, fucked for years on their book. And they could hedge it off and try to protect themselves, but it's definitely something people get caught in. Like you can read any vol blog or whatever on the internet, and you'll see the thing that shorting vol is the best trade until it's not, come up a million times, and it's very true.
Yeah. What do they do in the opposite of dispersion? Like, is there like an opposite to that trade? Do they just like long vol on both the index and the stock?
They just switch it.
All right, so they they long vol on the index and they short the
Well, because
stock.
so long vol becomes extraordinarily underpriced because everybody's been going short vol from the index perspective because um everybody's been going short the index, and so now everyone wants to pile into the long correlation trade, which is just the reverse of dispersion, or like the dispersion trade. And so as all of that becomes underpriced or significantly underpriced, it becomes very, very attractive to get that exposure and to keep adding to that exposure. And then once the weight of exposures shifts, so once everybody started, too many people have piled into long correlation, and now that position is larger and more robust than the short correlation trade, things flip. And generally, that long correlation flip is very rapid and violent. And this is one of the reasons, like if you look at like 20-year, 30-year historic stock returns, they'll always say this thing that seems like to an average trader this could never be true, which is that bears make more in profits than bulls. So bulls have a higher statistical win rate over time. Bears have a higher profit factor over time. And like the bearish profit factor over time is massive compared to the bullish profit factor, and it's because of that long correlation flip that occurs, and that's where bears just make a shitload of money in like 3 days, as all of the dispersion trade almost instantaneously breaks down. And this is a very big structural problem for the market, and that volatility should not be a tradable product, but there's no way to avoid it. Or at least we haven't thought of a way to avoid it yet.
Volatility is a beautifully traded product.
Ugh.
You got a screenshot?
Volatility is not an asset, JFresh.
No, but it is tradable.
Yeah, it
Is
shouldn't
that
be
a-
though, but it is, yes.
Hello?
Yep, I can hear you.
Okay. Yeah, did you get that screenshot? I sent it to you on my other account.
Yeah, 1 sec, let me look. Yep, I see
Yeah,
it.
it's is that a good indicator for tracking correlation?
No. This is so this is like forward return correlation, which is, I mean, it's something, but it's not what I'm tracking. It's like kind of totally different. This is just measuring the correlation between both products as a factor of price. I'm like 99% sure that that's what they're doing here. So basically, you're seeing like,
figure out what your new indicator is.
huh?
Are people trying to figure out what your new indicator is?
Oh no, that has nothing to do with correlation at all.
Oh,
Yeah.
I thought that's what we were talking about.
No. He's asking about this. This is the old indicator that me and Dork made like ages ago, where we track the the correlation between like VX and cash VIX, or VXX, or
Yeah, I get what you're saying.
VVIX,
I hate it all.
VVIX, and,
I hate it all
CashVIX.
over again.
Yeah. No, you loved this one, actually.
Did I?
You did. You were a big fan of this one. You thought this one was super fucking cool. You hated the other ones, some of the other ones.
Well, I hate it now.
Okay. Well, I'm
I
glad.
don't remember what it was.
I like your initial take of hating all technical indicators, because it is correct.
Yeah, prove to me that I should care. That's my.
What about
that's my
leverage? What
default
about leverage
position.
ratios on the carry trade? You like those?
I do like that one.
Yeah, that one's pretty fucking sweet.
Yeah, I track that one too. Except I don't really add the two together. I subtract the two together. I just feel like that's like the makes more sense because that's the spread, right? So a reason why you
Sure.
add the two together? Is there a wrong way to do that, or is subtracting acceptable.
So you're doing US 10 minus JP 10 times USD JPY?
Mhm.
Doesn't really matter.
Yeah, they pretty much move the same, although it's intraday they can sometimes move differently. And also the
Yeah,
leverage, the amount of leverage that it shows is a little bit different.
should be. Yeah, it
Yeah,
should be.
that indicator probably doesn't mean dick on the interday.
Yeah. Well, I mean,
Uh,
if you have
yours is like
real time bond
800x
pricing, it's fine.
or 8x.
Yeah, 8.2.
Yeah, but the
8x.
people who are in these carry trade positions aren't like waiting to liquidate.
No, I'm just looking at their
2
like
p.m.
I'm just looking at their like leverage ratio.
Yeah, so I think
Yeah.
this is fine on like the daily.
Yeah, yours being like plus is like 800%, but mine being minus is 360%.
Yeah, well that's just because
Both are
you've just
breaking
inversed
down.
it. You're just
Yeah.
looking at the opposite spread.
Mm. But both pretty much give you the same message, right?
Yeah, pretty much. Yeah. I mean, you're getting roughly the same information out of them because of how math works.
Right. So yeah, basically, at the end of the day, I guess the main thing I would probably want is like, to incorporate some of those correlation indicators into Gammastrike, and also the scanning of delta neutrals over gamma neutrals and whatnot, if
Yeah,
that's possible.
I'll put it down in our like stuff we're looking at for features, definitely.
All right. Yeah.
Takes time though. We're still real small, so I mean, if
mm,
like core features are gonna take precedence, but scanners will pop in and out, and I'm sure it'll come up on our list faster than a lot of other things we want to do.
Yeah, that's a great idea for a scanner, actually. I mean, we don't really have anything like it, so.
Yeah, so I
Yep.
mean, I'm trying to think about how you have this set up. So as a minus, you're kind of isolating relative policy moves, because you're capturing when I think JFresh, correct me if I'm wrong here, because I might be wrong on the math on this, but I think you're capturing when the gap widens by doing the 10-year minus the 10-year times USD JPY. So
This is the rate or the contract value?
it's the yields times the currencies pair.
Yield times currency.
So he's doing US 10-year minus JP 10-year times the currency pair, and I'm doing US 10-year JP 10-year US 10-year plus JP 10-year times the currency pair, which I think
I mean, nuts on the table with the threat of the hammer, I would do a minus, but I would have to sit down.
So the reason I have it is because this is sensitive to differentials. This is sensitive even if the differential is unchanged. So this combines like the duration risk with the FX. Whereas I think yours is just looking at the like policy, like it isolates. Like if you minus it, you would be isolating the policy changes.
I could see both. I think, yeah, I think that's fair. I don't know. I feel like you're putting me on the spot, trying to get me to be like, whose is better?
No. I'm curious as to what.
Give me a
he's,
month
like,
and pay me
capturing.
$100,000, and I'll tell you whose is better.
All right, so this is something I haven't seen on any other place, but TradingView has like a yield curve, but I think it'd be cool if we had like a carry curve where you just see the carry trade curve with this spread here. I don't know if we'll use the plus or minus, but either way would be cool, and it'd be curious to see like if the carry curve is inverted or not and stuff like that.
Yeah, yeah, no, it's definitely deeply inverted right now.
Yeah, well, you bring up an interesting point of like there are all of these cool things that we could add, and we are starting to get to a point with the service where we're kind of having to ask ourselves, which way do we want to go? Do we want to go the way of super ultra customization where everybody can pull up, basically, not like recreating Pine Script, but basically anybody could pull up whatever calculation of whatever various things they want? Or do we want to present people information that we have already determined ourselves has some actionable value that we can communicate what we believe that value is and why? Or is there some mixture in between? We're still kind of working that out. We want to make sure, above all else, that the platform is usable and that the information that is presented is valuable. But yeah, over time, um, yeah, we'll try to figure that out.
It, over time, it could probably even be a brokerage in of itself.
I mean, Girk wants it to be a brokerage. I don't know that I want. We don't have the bandwidth for that right now. I mean, right now our focus is provide good data. That's our one focus. So, providing a platform for people to act on the data, that's a whole other thing that we don't have any bandwidth for right now. But I know Girk has big dreams.
hmm As far as mainstream trading platforms go, Thinkorswim has probably got like the best, most robust data system out there as far as options goes. But Gammastrike goes so much deeper. But you can't trade the options on it directly. But I think it'd be a really good platform in that sense, just like the next Thinkorswim.
I agree.
If we I mean, if we get to the point where we can make it so that by integrating, so where I would get on board is when we're at the point where we can make the case to say that by integrating clever ways to allow people to act on our data in the platform, that they could do so much, they could execute so much better than trying to flip through a bunch of different services. I would be on board, but
I mean,
again,
I'll,
it
I'll
comes
say
down to
I'll say this: for what we're building, the natural progression heads that way over time. So we'll kind of arrive there naturally over time. So the more back end we build out, the more data streams we pipe in, the closer and closer we become to just being a broker. It's not like necessarily the goal. Like we've joked about it and stuff because it's a huge undertaking, not just on the development side, but the legal side is.
and also just from a competition standpoint, like what's our edge? What's our angle, right? And it would have to be how do you act on the data that we're providing because we're providing good data. Um and how do you build that action into the platform in a way that makes execution better than at a competitor.
Yeah,
It's like it'll
the
save
other
you
thing the
45
other thing about
seconds, which might be the difference between, losing 10% or gaining 50. That's something, right?
the other thing is that like that natural progression can also just end up being an exchange. That natural progression can end up being, I'm just hold on. I'm trying to.
A natural progression is a OnlyFans feed.
Yeah, yeah, it can end up being JFresh's only a fans feed. But no, seriously. I mean, like, yeah, we'll see. I mean, it's just a scale that we're definitely not prepared for right now. Not something we're currently doing. But yeah, no, I do see that on the roadmap, like kind of running into it and being like, why aren't we? But it's not something we're like pushing towards right now.
Yeah, for now, I could definitely tell that like when looking at the
Clearinghouse.
charts
Jesus
and stuff,
Christ. That's what it's
it updates really fast. Like the candles are super smooth compared to like TradingView or even Thinkorswim.
Yeah, our
Yeah.
At
our
least
live
once
data
a week,
service
all
is
of us.
one of the best.
At least once a week, all of us like pull up TradingView and us and make sure that we're still faster.
We're still faster. Yeah. We're still faster than a lot of brokers. We're faster, like way faster than Fidelity. We're faster than Webull sometimes. Webull like back and forth. Depends on what you're looking
Believe
at.
me, my wife knows.
Like but several like hundreds of milliseconds faster than TradingView, which is that's going to be a hard gap for them to bridge at scale. You could either build it from the ground up perfect or fail. But yeah, no, it does have some high frequency applications. So
Yeah, you're gonna make TradingView mad.
fuck them.
You're gonna take all their customers.
I hope so. That's the goal.
Yeah.
I'm tired of all
Yeah.
these shit options data services. Like, why does retail get garbage and everyone else gets good stuff?
TradingView will be a tough one to take customers, I think, but we will eventually cut into it. I think to start with TradingView, I think a big part of it will just be like we give you all this other options data that you want, and then if we give you enough of what TradingView offers, and it's like, why am I also paying for TradingView? Right. So like we probably won't implement like PineScript, but yeah, you'll be like, do I really need to pay for the extra shit on TradingView, or do I just migrate? But as far as like
PineScript sucks. I would never want to replicate that pile of shit.
Well, because the alternative to PineScript is nothing for most people.
Yeah.
But as far as like the other options platforms goes, we're gonna make a lot of them very upset.
All of them, as far as I can tell.
Yeah.
And with that, our last
MTK stuff. So SQL is that what it's called? I forgot.
SQL?
Oh.
SQL's for like
SQL,
databases. I mean, PineScript's an attempt at modularizing like mathematical programming. So it's like an attempt to like make a modular form of R, but it's really bad. Or like what is it? What's the math? What's the Python? The math Python plot? NumPy, yeah. Like an attempt at like making NumPy or R into a modular coding language. And it's just terrible. It's not well. I've been fucking with PineScript for like 3 days now, and it's just the worst.
Let's go back to C++.
It's faster.
Well, that's
put hair on your chest.
What's up, Willie?
I mean, aren't most of the modern languages built in C?
Well, like Objective C, it's evolved like 50 times in the last 20 years. But I mean, that's my complaint. A lot of the software is there's middleware in the middle of everything, slowing everything down.
We'll just force everybody to learn JavaScript to code on our platform. Yeah. That's the solution.
I mean, I don't even know. Is Python considered more bloated than JavaScript at this point?
No, Python's easier. Well, generally.
Well,
easier.
As far as bloated, they're probably both vying for the top there. But
yeah, I mean, but let's be honest. Nobody's getting in the weeds and old school writing tight, fast code. I mean, everybody's, what product can we buy that has pre-built libraries to help us develop interfaces and blah, 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 blah.
Yeah.
Like nobody's, moving pixels around in the window handling, and unless you're, Photoshop or Vectorworks or somewhere like that. Everything is so.
Yeah, I'll tell you what. When a
would you guys react in the middle of it all, right?
When an LLM AI lab like Anthropic or OpenAI or someone says like, "Hey, we migrated to C and we're going to bear copper on the chips, right, yeah. And we
have an assembly department now,
we've eliminated CUDA." That's when I'm like, "Oh shit, they're going to be profitable in 2 years."
But as
We've-
long as they're still doing all this shit in Python on CUDA,
JFresh,
like,
we should just go. We should just go build a pitch deck for investors in Silicon Valley and just tell them we're gonna run our chatbot off of Pentium 2s,
See, the thing is that fucking
air-cooled Pentium 2s, one Lakewood
what-
20-inch box
what's
fan.
the Chinese whale company? What's the LLM from
DeepSeek.
China? DeepSeek. They already did all this shit because they had to, and then nobody cared.
They didn't even have to. I think they just did it to be like, look at what you guys are gooning over.
Well, no, they had to because they didn't have the resources, and they still wanted to be able to. So they did all that work to be efficient, and nobody cared.
Yeah, apparently.
Yeah.
Also,
Who
there's
cares?
censored.
Anyway, thanks for coming up, Gun. I'm gonna get Willie out of the way, and then we're gonna shut this shit down.
Yeah, get him out of the way.
Bring in the closer.
Thanks for answering my questions today.
Thanks, man. Have a good one.
You too.
What's happening, boys?
What's up, Willie? All right, let's go. What do you got? Hit me with
I'm not double feedbacking, am I? Good.
it.
Excellent. I don't have a ton here, actually, other than I was enjoying the fact that I'm now down to 2, soon to be down to 1 Gamma service.
Nice.
Um,
And I'm assuming we made the cut.
you have the cut, yes. Now, admittedly, I have my eye on one that's coming soon, as you know, but we'll see how that goes. I don't think I'll be able to afford it. So I just want to do a little live interface thing here and take a suggestion or two that are probably easy peasy.
Yeah.
Sure, why not? On the volatility page, I would love to see on the new IVHVSK chart, like in one of the upper right corners, some little reset button to return zoom and scale to some reasonable default.
Yep, we're gonna have that.
You can
We're
actually
gonna
see
fix that zoom on it. Zoom on it's
Here,
fucked
while
right
you
now.
guys were talking, I managed to zoom myself to a place I couldn't find my way back.
No, I am banging the table. No, I literally I've been trying to prioritize it so much that I didn't even realize I put 3 separate tickets in for the same thing, which is and so then I had to consolidate it into one ticket, but I want this fixed. It's just there's so much other stuff that everybody
See, what you do is you start yourself like 10 burner accounts and then put a ticket in from all of them, so you fool yourself into believing in the urgency of the request.
It's
Everybody's asking for this. Oh wait, it was all me. Anyway, no, I like it. It's totally cool. I just think, and I like how the
No, it's not totally cool. It's annoying as shit, and I hate
Well, no,
it.
here's what I like about it. I like that the volatility y-axis is separately movable from the left skew axis, so you can actually kind of move them separately and compare when they're wildly
Yeah,
different.
but wouldn't it be great if they just both auto scale to their own separate axes as you zoomed in X?
Well, I think they do now. I mean, if I get through there, I can see a wildly misshapen skew, and then I move volatility, and I lose my view of skew. That would annoy me more, because they may take on such wildly different profiles. You, I think by necessity have to scale them on the Y separately.
Yeah, I actually agree with that part.
No, separate Y axes.
Yeah,
but auto scale
just a little one-click reset to bring them all back to like some reasonable default would be good, because I literally lost them completely earlier.
Yeah, it should be like double-click the Y and reset. It's just not implemented.
Yeah,
on this
that's
chart
not as
right
on
now.
macro. It doesn't
Some
work.
convenient interface type. Whatever
We're working on it.
Whether it's a visible, I like visible buttons more than like double clicks in wild space where you go, someone double clicks accidentally and you go, what was that? What happened?
Just
so
standard
currently our plan
functionality,
is
which
I
like
think we can change the functionality so that we don't have to do that. It'll be so easy to change the range that you're interested in that you won't ever feel like you have to do that.
Well, some method of getting back to visible. And I think
it will never be non-visible. I've thought about this for months. I know it needs to be done.
I found myself, I did finally get a hold of it again. I found myself that it took about 28 swipes to the left to get back to current time. It was like,
you just got to
how did this
reload at
happen?
that point.
Well, sure, except other things were set other places, like the vol surface was turned to a way I wanted it. And I had the term structure on a strike I wanted it. And it was like, and I got to lose all of it. So
Yeah.
I would say the same thing for term structure. I think a little button that returns it to the spot detent would be great. And a little button on the vol surface that turns it back to a default orientation would be great too.
But term structure already
So,
has
Let me
that.
ask you this: so term structure
It doesn't. How does it?
away,
I couldn't see where.
double-click.
You just
double
double
click
click
the
it.
Oh, double click the slider.
No,
Ah,
just double
click
click
the graph.
double click the
Anywhere in
graph.
the graph.
Anywhere in the
You can
chart.
double click the fucking slider too if you want. It doesn't matter.
Well, that's the first thing
Anywhere
I
in the
tried.
box.
Yeah, and I hate like disassociated wide landscapes of double clicking action. Does the ball surface do it too? Oh, it does. Look at that. You can take my 2 tickets right back off the list. But the IVHV and skew one could benefit from that. But you know what I'm saying.
That's what we're adding.
Yeah, I agree. It's unusable. We have plans to make it much more.
Yeah, I know it's just.
We're probably going to just separate skew out from IV.
Yeah,
but we just wanted to get it out to you guys quick.
Might not be bad either.
Yeah, it's probably going to go on its own chart with a better not a better look at it, but a different way of viewing it. That's going to be easier for people to understand.
Your little 5-panel design there would turn into a 6-panel design, I think.
Yeah, it would. Well, things will change, but it'll work out good. It'll be nice.
Nice. And the other one was, as I was in this other study group talking about like constructing very long, far out, sort of like Vega calendar spreads that were like 9 months out and a year out, and the intention of these positions in the space that uses them is to generate yield over like a 3-month stretch before then rolling them out or whatever. I showed you the trade. Well, imagine my pleasant surprise when I realized, I can go to Greeks by strike and I can actually examine all those points in space.
Yeah.
Like September 26, 4300, and it was quite nice. It was a good little use of the Greeks by strike chart. But
you can also look at Greeks by expiry and look at Vega exposure by date.
Exactly, and that was the new aspect of it, the strike and expiry button. Very nice. However, here's where I ran into a rub. Is it doing it? Yeah, I'm gonna do it. So I like that I just scroll left or scroll right, and it scrolls like you're supposed to. I find it curious that if I click and drag on the panel, it doesn't drag it left and right. It looks like maybe you chose to kill that functionality.
On which
so that
one?
You can have on either expiry or strike, basically any component on the Greeks by strike.
You're talking about the scroll. Okay, yeah.
Yeah, like I constantly find myself trying to drag the whole window because so many things in the world of interfaces these days are draggable that way. Especially with the translation back and forth between tablets and desktops with mice and trackballs.
And I guess we could add it.
I use a trackball with like a giant ball in it that you just turn the ball to scroll. There's no scroll wheel, so it's super convenient. But what I noticed was when you get way deep into out of the money either direction, if you click the expiry slider, you snap back to spot.
Yeah, I noticed that too.
I would personally like it to stay where I was.
Oh, yeah, that's annoying.
As I've scrolled down to like look at, what does June 2027 4200s look like?
Yeah, that's a good point.
I mean, you can look at them and then scroll down, but it will snap you back.
Exactly. Right.
I
right,
think
right.
that's because it's loading a new chart when you do that. But
I imagine it probably is. Yeah.
yeah, it's
But you could still persist the existing state of the chart to the new chart that it loads. It's doable. We
I
just,
mean, it doesn't persist. Yeah, it doesn't persist going between Greeks either.
yeah, you just got to
No,
get a
that
hook
makes
in
sense.
it and get before you load the
Yeah,
new
okay.
one. Pull out the data, pull out the information about the existing one, and pass it to the new one so that it doesn't lose.
Right.
its
Right.
state.
Right. You got to
It's
track the
doable.
user's
It's doable.
position.
Yeah.
Yeah,
You probably
it's
just
not
track that
impossible.
locally. Imagine my surprise that September 18th of 2026, there's 285,317 calls at 4,000. Imagine my surprise
It's a lot.
for that whole series all the way down from
Have you
today till then.
gotten to play with the OI heat map yet?
Do I have it?
Yeah.
Wait a minute. What? What is this plus minus button? It's Christmas morning on my screen. Woo! You are so. Yeah, I've been hounding you about this sort of a view for how long now?
I don't know if you've hounded me about this one, but all right. Why?
Well, I mean, this is the beginning of it, right?
Yeah, of course.
This is the beginning of it. Like, okay, if I now, you know how when I click on, here we go. Ooh, put OI, call OI. You did it. You did it, you sneaky bastard.
It's a lot of fucking data too.
It's so
You
much
Look at all the
fucking
other
data.
services who are doing a terrible job at this, and we're like, can we just do it all?
Yeah, I know. And there's like an orthodoxy developing in that part of this little funny little thing of well, this data is based on an official CBOV report with its bucketing tags and blah, 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 every 10 minutes. And they're going to go to every 1 minute in December, so it's going to be very accurate. Yeah, everybody says you can't process the tape. Well, I think you're processing the tape. Oh, I love it. Oh, dude.
Yeah, they say it's too big.
What?
That's what she said.
But I mean, basically, do you care if I mention names?
Yeah.
You basically.
Yeah, it's best to not.
Okay, well, there's a particular service. I think this is their secret sauce. Now, do this heat map for gamma and delta.
Oh yeah.
And
I knew you were gonna say that.
you knew I was going to say that, right?
We're getting it.
A lot of delta doesn't always mean a lot of gamma. A lot of gamma doesn't always mean a lot of delta. A lot of OI doesn't always mean a lot of gamma. A lot of volume doesn't. You know what I mean? There's a relationship there that I think I found from service. Sure, it maybe did not perfectly direct me to trade in some manner, but I felt like it informed me. And I like this. Ooh, and the oh, dude, this is really nicely done. I like the slider at the top.
You can trim or you can
Go
trim
further
the
out in
amount.
time.
Yeah, so you can trim the OIs based on the max change and min change day over day.
Oh, this is good, man. This is good.
You can change the strike
Really,
range,
the only
you can choose puts or calls, and you can also do net. And then each individual window pane has the expiration, strike, total OI, put OI, call OI, total change, put change, call change, and a graph of that change over time.
Yeah, historical OI for the life of the contract.
Uh-oh, I better reload this. I think something quit on me here.
Possibly.
So
okay.
one thing is, and we're still debating this internally on how best to handle the load. Currently, the default view is what we're showing the historical OI graph on.
Right. Oh, I'm on SPX. Shit, I'm on SPX.
I would like to expand that to all contracts so people can look at the full historical OI. We're just working on the best way to serve that in a way that doesn't melt the service.
Melt a hole in your AWS instance.
Yeah.
I guess when I say melt a hole in the servers, I mean melt a hole in our wallet.
And I mean, I don't know if I'll tell you why I find this valuable for anybody that's wondering like why some of the other services and people that are really into them are really into them. What I do with this, right, is I look for things like just over there about a third of the way up to the right, kind of centered between the dotted line and the right edge. There's two red boxes. I guess I could send you a screenshot. I'm looking at SPXW, and it's well, here I can just tell you. It's 9:30 expiry 65.95 and 9:30 expiry 6600.
Yeah.
Right. Those for anybody who's wondering and listening, that my eye is drawn there, and I want to know: is that a big position? Is it a small position? Do they look like they're paired? Like there's 8,600 of one and 8,720 of the other? Is there some other position later that looks similar? Like, it's a way for me of just sort of hunting around and seeing like, are big dogs laying down big positions that I should know about?
Yeah, that's the point.
And yeah, and what I've learned from some of my other wanderings and studies is like, there's a lot of entities out there that have known, repeatable, like a fingerprint of a strategy, right? That the people that are coming into this space out of the market making world are like, oh yeah, that's so-and-so. They do that every 45 days. As soon as the next expiry is listed, they put down about a $17 million spread with a calendar a month after that. And like, and they're not usually wrong. Like, sometimes these are positions that if you go, double click on these, look at the strike, look at the OI, go imagine you're constructing that position, put it in options in option strat, play with the sliders, see what that means. Like, try and understand what a position like that means.
I'm actually going to put a key in so people can tell, like, if you have like this strike and this strike, right? Like these two options contracts at different expiries.
Every 45 day, 50 wide put
yeah, you can look at that's like, that's your calendar. And then, side by sides are your verticals.
Exactly. I think that stuff now, you make a good point. Is it really helping you knowing, oh, there's 8,000 contracts just came in or went out? Is it more important to understand the delta and gamma impact? Sure, probably. But it's the start of hunting that stuff down, I think, is getting just everybody's making an educated guess on what the positions are. Bought, sold, bought to close, bought, whatever. So why not? Go ahead, make the guess. And I really, really like the fact that this is here.
I knew you'd love this one.
I had no freaking idea. But
I just put it in because you weren't 100% sure you were ready to renew yet.
Well, that's for other reasons, but
I know.
Yeah, but and like, I mean, you can identify what's happening out there, and I think it's for me, I find it's a really good study tool for just kind of understanding like. This options complex is used for a hell of a lot of other things besides what we use it for, and I don't think it's bad to try and understand that, and I especially don't think it's bad to start to understand how to not get swallowed up by those positions. I'm going to sell a call here. Well, that's a terrible place to do it, and here's why.
Yeah.
I think it's super valuable, and I'm super excited to see. Now this almost, how fast is this update, or is this a once a day thing?
Twice a day.
Twice a day?
No, it updates. It updates once a day. It updates at the AM.
We don't update it on the end of day report.
The end of day report doesn't have new OI values.
Oh,
It's just the
okay.
new ones from that morning.
Yeah.
Right, and my ultimate.
So that's why, and we went back and forth with this. That's why it says right now it says 25/09/10, even though today was the 11th.
It says
because
11.
No, the trade date.
Okay, yeah, that's confusing, but
10th.
yes.
Yeah, because the OI is from the 10th. So this is the OI
Right.
from
So end of day the 10th. This was the final report.
we got this
Yep.
no, we got this data in the morning this morning.
Oh,
Which tells you the change in OI, what is the OI as of the end of day yesterday.
so the time that
Tomorrow
this
morning
each
before
morning.
before market trading, you want to check this. It's usually around 7 or so EST.
That's when it's fresh.
When we get that new OI data from the exchange, we update this. So you will
Right on.
see 2025 0911 tomorrow morning before trading.
Okay. Well, the ultimate goal, the final boss for you guys, in my opinion, is the same stream of data and result of processing that informs the what I call Gherkin AI, the live voice narration every day on YouTube. When you're there, whenever you're not streaming, I'm like the voice component is offline today. What's happening? Do I need to restart my YouTube? The voice isn't working from.
I've been, man, I've been doing this shit for like almost 5 years now.
Oh God, no, I know. Well,
I'm
here's
just
the
trying
thing.
to dodge burnout a little, and then also I've just had a ton of like medical appointments between my mom and me.
No, of course, I get it. Well, this is where, like, this is the achievement unlock, I think, for you guys, is whatever is informing you all day long with that information should inform this chart. And it should inform this chart on a reasonable update schedule. I don't know that anybody would expect you to update it every minute like everything else. But if you updated it every 5 minutes, you'd be doubling the speed of CBOE.
We could do it.
You get where I'm going with this?
I know.
And maybe it's not this page, maybe it's a live version of this page.
Yeah, it would have to be.
You know what I mean? But that's where you don't have to announce this shit all day anymore. Let whatever back end that you've built that's miraculously grabbing, and put a massive disclaimer there. This is a estimation based on models. This do not, blah blah blah, whatever.
The service is a beta. This is that's our disclaimer.
Right, exactly. It could be in beta for. There's a product I use that's been in beta for 17 years.
Yeah, it's a phenomenal.
Just don't not call it beta, and then you're not on the hook. But anyway, this really is that's where I think that's it. You're off and running. Now, sure, there's a lot of people coming into this space. There's people coming into this space out of the market making business. A lot of them made their money and they just want to do what you guys do. They want to show people how to use this stuff. And they're all lamenting, well, I just want the tools I had when I was in the seat. So they're building it. What that means, who knows? We'll see.
Those
when they
tools
come
aren't
out.
even that good, though. I mean, they're
the
like,
tools
honestly, like.
I wouldn't know. I've never seen one. I don't know how to judge it. But I know that, like, I get upset when I can't use my custom baseball bat when I'm playing baseball. Is it that different than the other guy's bat? Probably not. It feels good to me.
Yeah.
The console I program on is the one I like to use, and people want me to use another one, I turn down the job. So yeah, I can't begrudge them in that. Whatever. I mean, people are going to do what they're going to do. But my biggest hope is that you make it to the point where whatever informs you all day with your narration should inform this chart and drive this chart in a live manner. And I don't doing it every minute. Who knows? Maybe that's a bridge too far, and maybe it's just too noisy, like you said. We've said before. If you get that granular with positions,
I'm still you still have to convince me. Hold on.
Thousands of contracts flying in and flying out. And
it's constant flow, but you still have to convince me somehow that bot sold matters.
Well, I don't know that bot sold ultimately matters if I really need to be more understanding of what Delta and Gamma are doing at the time.
Yeah.
But they are, in my opinion, a flag. They're like a flare going up. of like, just and for the same reason that you feel it's important to announce it.
Yeah, no,
think
I mean, I tell you guys, I don't know if it's just because people ask or if it's just like what I've been doing since I got the data, but like, also at the same time, you have to remember that sometimes that flag is just a rich idiot.
Yeah, absolutely.
I mean, like the other day, somebody came in and bought, I shit you not, like, they bought like 15,000 at the money contracts before close, and they all closed out of the money. They only were able to get out of like 1,000 of the contracts profitably. And
That's
like imagine going along on that dipshit's buy.
Well, exactly. But if you know it's happening, you can make a reasonable decision about, boy, I don't want to get in the middle of this.
That guy blew up like fucking $28 million in like fucking 3 minutes. You know? And like that's a strong a fucking signal as you're gonna get, and it was useless. So like I still, and like I knew it was. I was like, we're not gonna fucking, there's no way we close there, because like I still think that understanding the dynamics of the hedge, the dealer's dynamic hedging, is far more important than who's buying and selling what. Who gives a shit? It's all bought or it's all sold, ultimately, at the end of the day.
Sure. I mean, yeah, and
like I think it's actually really bad that a lot of these services are trying to follow that path, because I think it's wrong. Well, like, and I've had fucking bought sold for a year, and I mean, not to toot my own horn, but there aren't many people better at trading anything than me, and I can't find a statistical edge anywhere in it.
Okay, if you think you can't find a statistical edge, but the dude that bought 15,000 contracts 5 minutes before close feels a bit like an outlier. What about these positions that come in kind of a measured manner and just stay all day, don't capitulate?
I mean, I used an extreme example as an extreme example, and yeah, you get gamma on the chain that doesn't capitulate, but you could just see the gamma and the delta. Like, who gives a shit if it's bought or sold or if they're capitulating or not? I mean, like, and put call ratio does a better job at showing you the net flow than anything you're going to get from knowing the aggregate, like the disaggregated bought sold.
When I said to you months ago, when market tide, that's what I meant. That's what Unusual Whales calls their version.
of what? Put call ratio?
Yeah. I don't know if they use the same model you're talking about using, but they call it market tide, and it's like their most popular feature. And aside from all the flow hose that, think they're
options flow is like level 2 stock data. I haven't met anyone who can make use of it properly. Yeah, but traders are all like suspicious. Like, most of them are just like suspicious nitwits, and if they make money on one trade, they'll keep like ramming their head against the wall until they like lose everything they have because they made money that one time doing that one thing. So, like, if they can give themselves a bias on level 2 data, they'll talk about it for years. I know fucking futures traders that are like, oh man, you can see the out of the money positioning shifting, and look at all these bot orders up here in this iceberg. And then it's like, you fucking get there, and then the MM just steps in with 3,000 ES contracts and fucks everybody. So it's just like,
those people don't understand the dynamic that this community is learning.
Yeah, I know. I have a very different way of looking at the market than a lot of people.
People that are learning this from here or other places, they're teaching it correctly, and they're doing the work, and they're getting informed about this stuff. I don't think you have to handhold them, and I don't think it's completely invaluable to more than once a day or at some reasonable tempo within the market day to update that info, and not feel like you have to narrate it all day.
I mean, I would just build it to put someone else out of business. That's worth it, like a spite feature. But I do not agree with the. I have a hard time agreeing with the validity.
It's not a
of it.
basis, at least not for me anyway. It's not a basis to trade from. But I do feel a little bit more.
I'll tell you this: the reason SIBO sells it is because it's worthless.
I get it, but I mean,
if it had value, they'd just sell a report to Ken Griffin every 15 minutes for $20 million a day. And nobody else would ever see it. They'd hand courier it from SIBO over to his building on a running line of DoorDash drivers. Like
the irony is that the person who really knows is Ken Griffin because he has all the order flow.
I was going to say he's got better data than him.
Yeah, he's already got it all because it's his fucking book. I mean, SPX isn't, but if you run into stocks that are Kenny's book, I mean, they trade like they're Kenny's book. And that's how individual equities work until you get up into like the Mag 7. It's like whoever's running the show, it's their show and you've got to be on their side. And on SPX, fortunately, there's a little bit of advantage left for everyone else because there's so many people competing for the same space.
It's still a little too big for one person to just gobble it all up.
Yeah, no. Maybe there's 5 or 6 driving the bulk of the work, but
well, the beauty of SPX is that for every Susquehanna and Citadel and Goldman that you have working the spot flow, you have 80 little like no name cum croissants skirting the fucking tails and trying to make money out there.
Right.
And blowing those people up is just fun. So
yeah, like it seems like from what I gather, there's like 3 or 4 at the top, about 10 in the middle, and then everybody else skirting around. But anyway, I mean, I'm sticking with what I'm saying. I think that this chart is a really great addition, and I think that were it to update on a tempo within the day of some sort, I would find it valuable. I would like to see those red dots shift when there's, and it's up to me, the user, to look and understand that this is helpful, not helpful.
Yeah, of course. We're here to provide data, not trades.
And I'm not so much interested in like, ooh, there's a lot of contracts there. I'm more interested in like, do these relate to some other strike? And just trying to get a feel for that. And sometimes it seems like it's pretty obvious because the numbers
we have a 1 minute rolling window for volume now on the live data, right?
Uh-oh. What are they flushing now?
Yeah, but we haven't pushed that, right?
No, but the new one has that. You can just look at 1 minute volume rollover.
Oh well, give me that then. What's that shit? No, I mean, you've built 85% of the feature in this page here.
I know.
Like, throw the extra 10% at it, and I think it'd be bitching.
It's already bitching.
It's gonna keep getting better.
You don't even know what the mustard line does yet.
Yeah, the mustard line is not. Yeah.
I also don't know what the mustard line does, but
nobody's even checked them out.
Thing that like you hate it when people ask about it, but you actually really like it when they ask about it because you like that you hate when they ask about it.
Maybe. No, it's just I would actually like to know what the fuck it does, but I don't remember the last set of
it's
parameters.
Nuke made it, and it makes him happy, and so nobody's forced him to take it down, and he hasn't taken it down yet, but nobody knows what it is.
I think it should actually make it move in really unusual ways, so people get a lot of discussion going. What was that? What happened? It went way up.
We used to have a button where you could just scale it and make it look really weird.
Too funny. Anyway, I've made my impassioned plea that I think the
I heard it.
Particular chart, and if it didn't update all day, a gamma and delta button at the top there. And I know that you guys will put all 6 buttons at the top there when you get around to it.
Yeah, we will.
Being the complete thinkers that you are.
I gotta get rid of this bar of tickers first. I hate this shit.
Yeah, there's so much we still have to. Yeah, there's a lot of scaling that happens.
You know, that is visually clunky, but operationally really quick.
Yeah, also we've got to get rid of this fucking bar chart for IV.
Yeah, that was a joke. They did that as a joke because I kept complaining that the spots on the 3 graphs weren't lining up.
I know.
And it's really annoying.
We just need both. We need the line on the bar.
We just need the actual spots to line up.
It's just, well, no, like I actually love the bars for at the money, but it's so hard to like determine skew, like on the out of the money with the bars. So like at the money, they're awesome. It's super great to look at like the 5 strikes on either side of spot. But once you get past that, you lose a lot of information. So I think the line plus the bars is fine, but we also have the other implementation, so which is just better overall.
You know, I do sometimes. I find myself in the heat of the day, like having a brain fart over that sort of ratio-like number.
Which one?
That's when you hover over the IV. Well, I don't have the one with that chart I have there, but no, over on the IV chart.
Oh.
Like, imagine I was hovering over one of the dots on the current IV chart.
Yeah.
Like, if one were, I don't even know it's possible, unless you calculated it yourself. But
we do.
Actually, but to represent that in a percentage rather than, or I guess it is a percentage. But
it is a percentage. Move the decimal over, weirdo.
Yeah, I know. Okay. I find myself in the heat of battle going, God damn it, what is that? And I can just look at my options change.
30.5.
There you go. Okay.
Yeah, it's just.
I think that I don't know if it makes sense to, but sometimes when IV exaggerates one direction or the other, it feels like somehow the current line kind of normalizes itself in a way that it still looks symmetrical. And you have to go hover over those dots. So a separate chart might actually be better. I don't know.
Yeah, we have a plan for like making it more visually obvious.
Yeah,
when IV is going up versus IV going down.
We're still building some back end things, so front end hasn't polished this yet.
Right. Okay. Anyway, that's about all I got, really. I do absolutely dig this heat map page. And if this got a little every 10-minute refresh from the better than CBOE data you guys are piping in, I would be a regular visitor of this page. Probably going to be a regular visitor of it now.
Very high praise.
Well, it was there until now. Now, let me ask, just so I understand. Oh, okay. So the bar at the top is trimming, like capping the total you want to view. Like, I don't want to see.
So the green red bar, you have the high and low OI max, the maximum low, the maximum high of changes in contracts for the day. And then you can trim from there. So if you don't want to, if you only want to look at where OI has moved positive, you can
just clip it proportional.
Yeah, you can clip everything below 0. If you don't want to, if you only want to see where OI fell off, you can clip everything above 0, and you can clip those, to whatever scale you want. So if you want to see where were 5,000 contracts moved, you can trim to just look at strikes where OI change was 5,000.
Got it. Is there a reason, logic-wise, that the dates on the left are inverted? That don't start near date top, far date bottom?
Because this is spot in the current expiration, and then out.
So the current expiration is at the bottom of the chart, not the top of the chart?
Bottom of the chart.
Why
would I do it the other way? That's weird.
Because we make lists going down pages?
But it's not a list going down. It's a nearest to furthest.
If I'm going to write down dates.
Yeah, but if I had a field where I planted all of my options, I would have the ones ready to be harvested closest to me. So
6/30/2026 isn't closest to where I started reading this page, since I read the English language and I read from the left to the right and the top to the bottom.
well, get good.
This
This isn't written in English. It's written in option.
I'm going to turn this monitor upside down. Perfect. Got it. Just kidding. Okay. I don't. Is that the same everywhere else? Do strikes go
Yeah.
top to bottom or bottom to top? No. Look at the Greeks by strike page.
They go left to right.
No, the expirations go top to bottom.
Where?
On the right side. On the
On
right
the
side.
Greeks
All
by...
expiry button. Today,
Oh.
tomorrow, next day, next day, next day.
Okay, I'll flip that.
All right. Well, I mean that they go top to bottom because we make lists from like here, now to later, 1 to 10, lowest to highest.
Weird.
I don't know. I would flip the heat map chart over, but that's just my interface beliefs. And then I would start looking from today till the future, not
The greatest
out of the bottom and go back up the
physically, like if you just think about the chart in like a physical space, you have the largest concentration of changes in OI closest to you.
You're thinking of the chart as a two-dimensional object, and you're at the bottom, and you're filling the bucket from the bottom to the top with the dates. I get it. But I don't know. I'm just thinking of it as a list of dates from today till later.
That's a graph, not a list. So the y-axis increases from the bottom. Yes. As it should.
Well, it's a list of dates in my mind, but okay. I get you.
It's days. Think of the y-axis as days to expiry instead of thinking.
I will say this: of the other
dates.
services that have attempted a chart like this, you're the only one with the dates on the Y and the strikes on the X.
Yeah, because the other way looks stupid.
But the other way looks like my options chain with strikes going down.
You can invert that.
Ooh, that'd be interesting. Have a button to invert the heat map axes.
No, I'm not doing that.
Come on.
It's always gonna be displayed like this. And if there was ever a consideration for me changing it, you've convinced me not to.
Okay.
Yeah, I just can't imagine why anyone would even want to look at it another way.
You could also, in addition to the click to open the info on the right there, after a certain amount of time hovering over a square, pop up the OI.
We actually had it pop up on hover before, but then it also, like, the boxes are so small that it immediately just like changes. So it's constantly flipping between them, and it's really hard to read them. So we just made them click.
Oh, how do you trim dates?
You can't.
What do you mean?
What do you need to trim dates for?
I don't. If I don't care what's going on in June of 2026 right now, I can make my boxes bigger.
Yeah, I mean, we guess we could.
Trimming and
Much
Y.
like you're trimming.
Almost always the issue is trimming an X, not Y.
Right. It would be. I mean, basically, it would be the same control as you use on the Greeks by strike page. Slide the slider down.
Yeah, we could do that. That's fine. That I don't hate. That's fine.
Okay. Well, I'll just turn this monitor upside down. And, no, all right. Well, I mean, at least it's there, and you know my views on this.
Willie, I need you to just think of the y-axis as being DTE and not individual expirations, and then it totally makes sense.
Yeah, but still the lowest numbers at the bottom.
Yeah, because exactly. Like a y-axis where you would have, one data expiry and then you have, 365 up here.
Yeah, I get it. I get the mathematical justification.
Okay. All right.
I just if you I think of this more as a spreadsheet than a graph, and that's probably why I'm hung up on top to bottom.
That's because you get that shitty spreadsheet from the other service.
What used to get from the
Well,
other
whatever.
server as of a week and a half ago.
Yeah, but like, just get used to things being displayed
Yeah.
properly in a financial model versus somebody giving you a fucking SLX file.
All right, I got
Remember
you.
what I've always said: Excel's for interns.
Excel is for interns, and non-circular driveways are for poor people.
Exactly. Well, it's technically it's only poor people have to put their cars in reverse.
Correct. The rich people either have people for that or build their driveways appropriately.
Yeah, either it spins your car around or it's a semicircle.
All right, well, that's all I got. And now it's like, what, 2 in the morning where you are?
1.
Yeah, it's bedtime. I gotta go to bed.
Good
My-
night, Jay
my
Fresh.
beauty sleep. Yep.
I'm
All
also
right,
gonna
thanks,
go,
guys.
go to bed. We're
I'm
gonna
sure
baby farm this.
everyone's gone now but us anyway.
Thanks for wrapping it up. Thanks for wrapping it up, Willie. Yeah, it's pretty much just us left. Cornub, but he's on the other side of the world. So.
Solid close. Yeah, Cornub's also just freaking out because he's been going through and he's been listening and summarizing all of the talks we have. So he just woke up to like a 4-hour
Oh, my God.
video that he has to now go through and break down.
You guys don't feed the video into one of those transcript creating AI services?
No, we require the outputs that we give to people to be accurate.
Yeah, unfortunately.
You get about 80% of it done and then proofread it.
Well, how happy are you going to be if we told you that the information that we're telling you is 80% accurate?
Not after Cornell proofreads it.
Then it might be 70% accurate. We don't know. All right, so let's.
The only way he could proofread it is if he goes through and does all of the work anyway.
Wow, manual transcription.
I'm done. Fuck you.
Ouch. Cornell, you're doing God's work.
All
God.
right. Good night, everyone.
All right,
I'll be around tomorrow.
Good night, everybody. Later.
See ya.